I got cash in my pocket and nothing but time. All these charts in the closet, red lines in my mind. I just leave them there, I don't even care, no. Holding up a flare, I could use a prayer. Oh, I got cash in my pocket, but I'm barely alive.
Yeah, don't know why, but it feels like my world is crashing down. I just bought that deal, now it's smashing now. How much margin did it take to get us flashing now? I lose a piece of my soul every time the chart flashes. So I'm asking every trader that's watching my passion, thinking I'm lost in the fashion, I forgot my captions. Understand I'm just a dropout with a Bloomberg habit. I used to screenshot dreams, now I panic by habits. Me and my boy back at that desk, no rest, we mapping, riding plays, down on napkins, charts so small, we shared a tablet.
Look what happened. I got cash in my pocket and nothing but time. All these trades in the closet, red lines in my mind. I just leave them there, I don't even care, no. Holding up a flare, I could use a prayer. Cash in my pocket, but I'm barely alive.
Don't know how I get so high, but I'm not cashing out. Hope my gains are in my blood, I don't pass them out. Hope I'm alive to see the market cool his wrath somehow. Cause Powell said inflation and it's crashing now. Yeah, my first reaction was too fucking cracking. My portfolio shattered, don't ask where I'm at. I've been battling the fact my greed turned savage. The only thing the chart asked was for me to manage, but I hung up too fast, went to sleep in denial. Lost more in one night than I made in a while. We all need a second chances, but I bottled my sadness. Guess I'm just happy that I didn't sell before the madness.
Cash in my pocket and nothing but time. All these charts in the closet, red lines in my mind. I just leave them there, I don't even care, no. Holding up a flare, I could use a prayer. Cash in my pocket, but I'm barely alive.
I think I'm ready to ride tonight. It's wild cause I ain't lived half my life. Saw the market crash, it whispered by. I said you tryna short my afterlife,
but I don't even care, you can keep me there, yeah. Holding up a flare, I needed a prayer, yeah. I got cash in my pocket, but I'm barely alive. I got cash in my pocket and nothing but time. All these trades in the closet, red lines in my mind. Holding up a flare, I could use a prayer. I could use a prayer. I got cash in my pocket, but I'm barely alive.
Oh, brother, oh, brother. Good morning, and welcome back to another episode of the Matt Kohrs Show, where I'm Matt Kohrs, and you folks are the show. It is a beautiful Wednesday, October the 29th, and happy FOMC Day to all who celebrate. Yes, that means not only is the market going to have a lot of swings and ranges and crazy volatility, but it means we are doing two shows today. Obviously, we're going to be having the quote-unquote normal show this morning, and then we're going to be doing another show this afternoon to pay attention to the FOMC rate decision and also listen to Fed Chair Jerome Powell's press conference at 2:30 this afternoon. So the results come out at 2 p.m. Eastern, and then 30 minutes after that is the press conference. So we'll start streaming again around 1:45 this afternoon. But actually, the morning show, not only am I going to prep you up for what you should be paying attention to, what you shouldn't be paying attention to, all the crazy geopolitical news, government shutdown news, the Fed stuff, and also the fact that Nvidia is a nonstop runaway train. We have a little bit of a specialty thing going on this morning around 10:30. In about an hour and a half, Brent, a co-founder of Spot Gamma, that options analytics tool I use literally every single day to call out all those magical, mystical levels to you folks. He will be joining the show today for a myriad of different reasons. I reached out to him and I said, hey folks, FOMC day is going to be crazy. I know a lot of people going into it are going to have a lot of questions of the key levels to pay attention to and what to do. And they said, actually, this is perfect because not only are we more than happy to break down what's going on with FOMC, what's going on with all the Mag 7 earnings, also, they have about 4 to 5 different new products and services and tools that they are launching for free to all of you to kind of test drive for the remainder of this week, obviously for a limited time. So that is going to be phenomenal. We're going over all the new tools and how you can already start using them today, what to look for from an options analytics perspective for this FOMC meeting, and then obviously the upcoming we have a lot of earnings. In terms of market cap, the largest percentage of the S&P 500 is reporting this week. Microsoft, Google, Amazon, Apple, the list just goes on and on and on. So we have a lot to get into today. I'm so happy you guys have been able to join me early this morning. And every single day, your boy is feeling that much better. Apparently, you just need back-to-back nights of 10 plus hours of sleep. And that's how you can, get your body out of weird time zone issues and weird sleep deprivation problems. Am I feeling 100%? No. Folks, whenever I'm here with you, I'm feeling 110%. I'm always going to give you that little bit extra. So I very much appreciate you guys being here already this morning. It's 9:08. It's the crack of dawn. I don't know anyone who's already up at 9:08 in the morning. So folks, I thank you. I thank you for being here. I hope you're ready for a crazy day, extra streams. We have a great guest. We have a lot planned. If you haven't already, don't forget to like as you guys are joining in, as you like and comment, spam away. All that type of engagement on both Rumble and YouTube helps really, the algorithm promote this show to more and more people. So if you want to say, hey, hi to your closest friend in chat, if you want to smash that like button, don't forget to subscribe, turn on those notifications. And with all that being said, let me take it away. S&P 500 futures rise as investors wait Fed rate decision. Nvidia climbs. Whoa, Piper? Can you guys hear Piper? She's freaking out. She's just slamming into my door outside. Do you think, do we want Piper on today's show? I feel like that's going to be yes. Hang on one second. I'll see what she's up to. We'll get Piper on the show. Folks, she was the whole time. She just wanted to trade with us today. How are you doing? You want to hang out today? You want to say hi to everyone? You have anything to say about today's FOMC decision? It kind of makes sense that she's a little... anything you need to get across to the crowd today? You were very, very vocal outside to get in here. You just want to be here today? You want to know what's going on? All right. Well, I'm sure she will come back when the time is 100% appropriate and it's going to work out well. So obviously that is the world's leading financial advisor. And as the time gets closer, I'm sure right when we all need it, she'll give us that perfect advice. But anyway, here's where we're looking. SPY is basically at the all-time high, which was the intraday high of yesterday. The Nasdaq is actually getting another gap up. If we open here, this is 4 gap ups in a row. From a stats perspective, I don't think I can really appropriately articulate how incredibly rare this is. So on the Nasdaq side of things, and obviously it's being very much fueled by what we're seeing here in Nvidia, but on the Nasdaq side of things, folks, this is absolutely nuts. So you can tell. You coming back? Uh-oh. She's looking like a submarine. There's that cattail. Why don't you just chill for a second, brother? Knowing my luck, she's just going to make a beeline to all the important cables that the camera is. Please get out of there. Stop that. Stop that. Uh-oh. She's coming around. She's circling around like a shark. And here we go. Oh, nope. Hang on. We have round 2. All right, round 2. Yeah, she knows what's up. Are you just going to sleep over there today? That's a rare place for you. She's now at my other computer. If you mess up those ones, I don't mind so much because that's going to mess up the stream. All right. She is a micro panther who lives in my apartment with me. And if I'm being completely honest, dictates how this. Oh, all right. She's circling back around for round 3. A little submarine action there. A little submarine tail. The Jaws music intensifies. That's honestly how it feels with her. All right, where are we at? Sorry, I'm getting distracted. After demolishing U.S.-China relationship, Trump is rebuilding it his way. So I want to put this first because it's still very important. Technically, this isn't going to be the hottest news of the day. Most likely, we're going to hear more about it tomorrow. But remember, one of the biggest things right now fueling this market's push to the upside is the uncertainty and the tensions and the apprehension of the U.S.-China trade deal getting removed. It seems like President Trump and President Xi are both saying, okay, cool, like we're going to make this work. And you're seeing it not just in the US market, but you're seeing it in global markets of everyone's like, okay, cool, this is awesome. So this is one of the major all right. Well, Jaws here has calmed down for a second. She's on my lap. All right, I'm sure she'll pop up and tell us what she needs to when she finds out that it is important. But anyway, you okay there? You just want to watch this trade stream? All right, we're going to see how this rips. I want to put this out there. Obviously, very important. Not going to be the biggest news of the day, but remember, like, just keep it in the back of your mind that as much as we have the FOMC today and earnings tonight, we're going to be hearing more and more about this as early as tomorrow. So I want to put that out there, but it's not the only trade deal situation that is going on. South Korea says agreed with U.S. on trade talk details. Trump says he's reached a deal on trade with South Korea. Lee awards Trump highest medal, gives him replica of a gold crown. Lee asked Trump to revise decades-old nuclear energy agreement. China confirms Xi will meet Trump on Thursday, tomorrow, in South Korea. U.S. President touts trade deals and peacemaking economy in speech. So there's a lot going on the larger global political scale. Right now, it's all trending in a very positive direction, which is exactly why we're seeing so much bullish enthusiasm in the market. Bloomberg did a very quick little breakdown on this. I think it's a good one. So here, let's just give this a quick listen.
Together, we're solving the challenges that no one before us has ever been able to solve. And we're forging a free and open Indo-Pacific. And for all of the people, we're creating a future of dignity and security, prosperity and pride. From the rolling hills of San Francisco to the gleaming streets of Seoul, from the bustling factories of Toledo, Ohio, to the bright lights of Tokyo, from Pittsburgh to Palawan, from Boston to Bangkok, from Detroit to Da Nang, and from Cleveland to right here in Gwangju. Nice place. Did I do good with that one? Did I do okay? Gwangju.
Has a tough time saying.
Good, beautiful place, by the way. We're strengthening old friendships, forging new bonds, building new factories, pioneering new industries, and creating a dramatically better world for our children and for generations to come. Together, we will build a future of strong, independent nations on both sides of the vast ocean, joined by our common interests, united by common values, and reaching constantly toward a richer, safer, and more peaceful Pacific with fairness, persistence, and common sense. That's such an important 2 words. We will build together, we will trade together, we will prosper together, we will thrive together, and above all, we will win together like never before. We're going to have an incredible relationship together for generations to come.
Korea, the trade deal that was
I just want to thank everybody in the room. I know so many of you. You're incredible people. God bless you. God bless the nations of this great region, and God bless America. Thank you very much, everybody.
All right. You get the point. Really good meeting. A lot of people super stoked about it. We have deals with now Malaysia, Cambodia. Currently, Trump is on this big, as he even referred to it, Indo-Pacific tour. And I guess the grand finale is going to be going down tomorrow, Thursday, with the U.S.-China presidents meeting in South Korea. And then we're actually even getting some recent reports that Trump will be going to China in early 2026. So this measurably can easily have a massive impact on the market, whether it goes very well or poorly. You could look for a bullish or a bearish reaction. I need to put that out there. But also, as you folks in chat are already pointing out, Nvidia, you guys notice some interesting stuff here. The fact that Trump now just in South Korea making a deal. And check this out. Nvidia CEO Jensen starts a key trip to South Korea. Here's what he might be up to. So yesterday, Nvidia not only did the stock rip and almost hit $5 trillion in market cap, and today that's actually a very real possibility. They had this giant event and they just announced big deal and just like a big development, just one after the other, after the other, after the other. And that's exactly why Nvidia, which already going into the day yesterday was the largest company based on market cap, it just increased its league. It's crazy what is happening with Nvidia. So I just find it interesting that at the exact same time, we have a lot going down in South Korea. All right, so that brings us specifically to today. So yes, early this morning, we're going to have some new home sales. You're going to get crude oil inventories. New home sales actually keeps getting just kicked down the line of where we're getting it. But the real show today is at 2 p.m. 2 p.m., we get the Fed interest rate decision, and then at 2:30 minutes later, Jerome Powell, the chairman of the Fed, will be doing his press conference. That's the star of the day today. 2 p.m. Eastern, 2:30. So we're going to do a specialty second stream at 1:45 today. So we're doing the normal morning show, and then we're going to be doing this afternoon show. So this is really what's going to be crazy. Just so you guys know, all markets, whether you're looking at the fixed income market, whether you're looking at poly market or call sheet, whatever it is, everyone is very, very confident that it's going to be a 25 bips rate cut. Right here, you have poly market is 98% confident. Call sheet is also, actually, now it's 99% confident. We know we are getting a 25 bips rate cut. So the logical question here is if we already know the decision at 2, what's going to drive the market higher or bring the market lower? Well, it's kind of a two-part answer. Fed is seen refraining from sustained rate cut pledge Trump wants. So it's all about what is the commentary going to be on the path forward. You can see right here, we are 99.995% confident that at this meeting today, we're going to be dropping down to 3.75 bips. Okay, so that's going to be a 25 bips rate cut. Looking at the next meeting, the December meeting, we are 85% confident. But you can see things get a little bit squirrely in January. And you could most likely argue that that's what the market's going to be looking for. Is it more likely than not that we're going to skip a rate cut, or are the odds going to start to spike that, we're going to go down another 25 bips? So it's this idea of for the next, 2, 3, 4, 5 meetings, is it 25 bips, 25 bips, 25 bips? And they're going to kind of somewhat loosely commit to that path now? Or are we going to keep going with that normal rhetoric of, we're going to see what the data is and we're going to take it in a step and not really commit to anything? So that's going to be one thing. And we'll I guess, chalk that up to being how dovish is Jerome Powell really going to be? The other thing that you have to consider is right now the Treasury portfolio. And when I say the Treasury, I mean the central bank's portfolio. What are they doing with quantitative tightening? Are they going to stop that runoff because they themselves are admitting that the economy is starting to look a little bit weak underneath? So any commentary that you hear to the quote unquote portfolio runoff or quantitative tightening, that's going to be the other gigantic thing you have to listen to today. And maybe just for the flair of drama, maybe the third thing to listen to is we know that Jerome Powell, his position, his tenure is going to be ending in May of 2026. However, that's just as the Fed chair, not necessarily him being on the FOMC, the Fed board in a general sense. In fact, his tenure to be on the board goes even longer. So he might be getting a little bit of, like I said, drama-related questions, because obviously he and Trump are not the best of buddies, of are you going to step down officially from all of the central bank, or are you just going to be stepping down as the chairman, once again, coming in May? So that might be the third least important one to listen to, but hey, it could be impacting the market regardless. All right. I do want to talk about Nvidia because many of you are chit-chatting about it, and it's for good reason. Nvidia, the largest company in the world based on market cap, a hair away from being $5 trillion. Nvidia is set to be the first $5 trillion company as AI bets boom. Basically, if we trade at where we're at right now in pre-market trading, yes, it will be a $5 trillion company. Yesterday alone, adding hundreds of billions of dollars to its market cap because it had a very good event where it basically announced a partnership with everyone. It almost felt as if it was the Oprah of stocks, and you get a partnership, you get a partnership, you get a partnership. Nvidia shares pop 3% in pre-market as tech giant nears historic $5 trillion valuation. This is incredible. If you want to know more of the nuanced details of what happened yesterday, I highly implore you to watch the video that we posted on both Rumble and YouTube yesterday, getting into every single deal. But Nvidia is a runaway rocket ship. I once in a while actively trade it, very rare. This is just a keystone of my long-term investment portfolio. And honestly, when I started getting into it, I was like, man, this is trading at a pretty high valuation. And that was hundreds of dollars ago. So I'm very happy that I took a little bit of a quote unquote risk when I was getting it. But this for me, I'm in Nvidia. I've been in Nvidia for a very long time. And I'm just sitting on these shares and just letting it ride and ride and ride. And it's been absolutely phenomenal. So congrats to all of you who are still in it. If you're not in it, be careful about just making a core investment at all-time highs, especially when things are this frothy. But it's definitely one of those ones that on any measurable pullback, it might be very, very enticing. One quick note here, Trump signals plans to discuss NVIDIA's super duper chips during talks with China's Xi. So you can see right now that Trump making a deal with South Korea. We know that the CEO of NVIDIA is in South Korea. And then all of a sudden, the Chinese President Xi is coming to South Korea to talk with Trump, where we know that the U.S. and China, for national security issues, have been looking at these NVIDIA chips. And I wouldn't, folks, clearly the three gentlemen, whether it's going to be publicly announced or not, I would be willing to bet a lot of money that all three of these guys are about to have a very serious sit down. Now, will it be publicly available? I don't know. Will they even admit that the three of them talked? But I don't think it takes a genius to read the writing on the wall here that Nvidia, the world's biggest company and the leader of it, is about to talk with the two most influential country leaders of all time. I think this is a pretty obvious one. So in terms of news, I don't know which way this news is going to break, not going to break, but obviously pay attention to it. And even though we're talking a lot about Nvidia, please do not forget after the market closes today, we're going to be hearing from Meta, we're going to be hearing from Microsoft, we're going to be hearing from Alphabet, aka Google. So we're going to have three major tech plays reporting today. And then tomorrow we're going to be hearing from Amazon and Coinbase, two very large ones, also including, Amazon and Apple, and then also including Coinbase, Reddit, MicroStrategy, Riot, Cloudflare, Roku. So between today and tomorrow, we have a lot of major players. Actually, pretty much all of the Mag 7, excluding just Tesla and Nvidia. That's pretty much it. So we have so much going down. We have FOMC decisions today. We have giant earnings today and tomorrow. We have giant political developments yesterday, today, and tomorrow. If you're an active trader, a swing trader, folks, this is our Christmas. What else is there to say? Everything that could possibly be going on is going on right now, these few days. I just hope you're ready for it. I hope you get on the right side of whatever crazy trend is created, because this is a money-making opportunity. If you haven't already, don't forget to sign up for the newsletter. It is 100% free. My mod will drop it in chat. It's in the description of the video. And I just want to show you what is the seasonality of the day. Wednesday, October the 29th. Historically, the Bulls have won it more often, but when the Bears win it, they win it with more size. It's kind of a choppy. So from a seasonal perspective, it's not really that trendy. Some years are very good bullish years. Other years are very evident bearish years. So it kind of just neutralizes itself. But for the remainder of the week, tomorrow is also neutral. And then Friday is leaning a little bit more bullish. So seasonality is not the end all be all, but I do think it is important, obviously, to pay attention to. And then that brings us back to the overall market. Yesterday, we hit an all-time high. We have two very close and evident downside gap fills to 6807 and 6749. Obviously, if you're bearish and if there's some sort of bearish news development and we start to break these recent lows, those would be your natural targets. However, on the other side, there's currently a lot of people eyeing up this key technical and psychological level of 7,000. So in terms of just key technical levels. The upside bullish play would be 7,000. The downside bearish play would be these dual downside gap fills. What's crazy is the NASDAQ is actually going to have, is it going to have 4 now? So the NASDAQ also hitting a new all-time high yesterday, getting to the top of this range. But based on where we're scheduled to open today, this is going to be another downside gap fill. Let me get this right here, Red. So we are scheduled to open above 26087. So we have 1, 2, 3, 4 downside gap fills in a row. That is crazy. I cannot properly articulate how statistically rare this is, to the point that this might be the first time in US stock market history that this setup has ever existed. I did a little bit of back testing. I couldn't find it. Maybe it's out there. And if it does exist, maybe there's one example of it, but this is crazy. Gapping up to a new all-time high, gapping up to another new all-time high, gapping up to another new all-time high, gapping up to another new all-time high. I do not believe this singular event has ever existed before in stock market history. Folks, you are living through something truly insane. Now, with that being said, it does look as if the small cap sector isn't really getting the memo. We are not that far away from an all-time high, but it's not making fresh ones the way we're seeing in the S&P 500 and the NASDAQ, which really shows that it's the Mag 7. What's pushing the overall market is more shown in the NASDAQ, and that leads me to believe that it's basically Nvidia, which is another 3.6% gap up. This push in the overall market is truly because of, it's just a handful of stocks. Excuse me. It's just a handful of stocks. There are few tech players that are sending this overall thing to new incredible heights. And at a certain point, that's exciting if you're in those because they're ripping so much, but there's a certain sense of density risk that if those couple stocks start to falter, a little bit of bad news, maybe you miss earnings or something like that, well, the entire market's push is going to come undone. So we have various measures, whether you're looking at the lack of correlation with the overall market and the Russell, whether you're looking at Core 1M, whether you're looking at just like how rich all these calls are right now. There are many metrics that tell us there's a small herd of stocks keeping everything elevated. And when you look at the rest of it, they're actually kind of flat. So that is something you have to consider, maybe favoring the bears. Remember, going into any individual day, I think it's very improper to have this absurd bullish bias or this absurd bearish bias. If you're exclusively bullish or exclusively bearish, I'm not buying what you're selling. I think every single day you should come in and be like, okay, I have my bull case, I have my bear case, and as price starts to develop, you can play whichever one you think is proper. And that really brings me to the craziness of today, where Captain Condor is back, which is insane because Captain Condor is deciding to play on an FOMC day after already getting blown out earlier this week. But what's strange about it, and they're playing with size, 11,000, but what's unique about Captain Condor today is they're playing, instead of the wings being spread by 5, they're being spread by 10. So generally right here, you would sell the 6915 and spread it by the 6920. Today, it's spread by 6925. So they're doing a spread of 10 today, which is basically equivalent. Instead of this being 11,000, you could basically say that it's closer to really doubling up, 22,000, which is this massive size that we've been seeing recently. And then on the put credit spread, it is 6,850, and instead of being spread by 45, it is spread by 40. So it's a 10-point spread today instead of a 5-point spread, and that's exactly what I have kind of marked out here. I put it in this white box just because it is new, 6915 by 6925. And then the south side, the put credit spread, the call credit spread's up here. That's an underbet. The put credit spread is down here. That's an overbet, 6850 by 6840. So overall, this is the choppy zone. I need everyone to get prepared to see what in the world either is or isn't happening here. But man, oh man, are we in for it today. Dingity ding ding ding. The world's largest casino is now open. Best of luck to all. Play responsibly, and if not, have fun. Folks, it's going to be a wild one. And on days like this, it is completely acceptable to not trade. If you think, hey, man, I don't really have an edge. I don't know what the hell is going on, what's not going on. If this is a day where you're like, dude, I just feel far more comfortable sitting back and letting the chaos play out and then settle down and engaging the market tomorrow or the next day, that's That's completely fine. You do not have to trade every day. You do not have to trade every day. So maybe if you want to get a little scalp in before the craziness and move on with your life, that's all right. On the flip side, if you're a hardcore casino degenerate and this is the day you want to sling it, it's not necessarily my style, but hey, I wish you the best of luck. Now, I do want to remind you, Brent, one of the co-founders of Spot Gamma, the best options analytics tool, and that's exactly what I'm using here. Look, they already rolled out a bunch of new stuff that I think is absolutely phenomenal. Right here, here's the new version. Very, very cool stuff. So we're going to be looking at options flow, and like I said, they did this hero upgrade, and they have an options calculator, and they changed their scanners. They offered new scanners. A lot of cool stuff going on. But anyway, Brent's going to be joining the show in 1 hour around 10:30 this morning, to break down all the new tools, to break down how he's playing FOMC, and also to give us some specialty options insights to all these Mag 7 earnings reports. So we're going to have a great conversation today. Once again, that's on this morning show at 10:30, and then we're going to be streaming again today after or right before the the earnings for monetary policy. But we're going to be streaming right before the FOMC interest rate decision. So at 2 p.m. today. So we have a morning show. We have an afternoon show. The morning show is for market open, obviously what we're seeing right now and all this craziness. And Brent's joining us from Spot Gamma. And then the afternoon show is going to be for us seeing how things play out with Jerome Powell and the craziness of the market. And then that's going to be leading us into earnings tonight. And then that's going to be leading us into all of the results from President Trump and President Xi talking and seeing where we're at with the trade deal. So, folks, get ready. I don't think it is appropriate to be bullish or bearish here. I'm actually getting closer to neutral. I fully understand from a price perspective and momentum standpoint that everything is bullish. Price structure and price momentum is absurdly bullish. However, we're getting to that point where it's so incredibly bullish that you could start to argue for mean reversion. And we're also starting to see some of the market internals deteriorate. So for example, we're losing quite a bit of correlation. Look at this. The Russell is red while the rest of this is green. We're starting to see gold start to pick back up, even though equities are starting to push. We just hit a new all-time high on the SPY here on the S&P 500. Wow, that's crazy. We just hit another new record level on the S&P 500, and we are getting very close to testing this upper wing of the Captain Condor. I should let you know that these positions that we're saying most likely are going to be changing throughout the day. So I'll keep coming back to this particular screen from Spot Gamma to let you guys know about any new positions. But if you're looking for this breakout of 6915, your next natural target would be 6950. You do have some support at 6,900. There is some people playing 6,875, and then you also have people playing all the way down here. This is the put credit spread at 6,850. So basically, these are all the key levels. Here, I'll put it all onto one screen so you can see it a bit better. Feel free to screenshot these levels. Feel free to write them down. Feel free to do whatever you want. But basically, these are all the key levels that I care about, all the way between 7,000 and 6,800. And obviously, everything is really being defined by this large iron condor, aka Captain Condor today, which they are hurting this week. They got really, really clapped earlier on. So let's wait, see how things play out. I don't know how many of you either did or didn't see my Twitter yesterday. I ended up making money. I made about $1,000 per account. Unfortunately, those 5 new accounts that didn't have much buffer, those didn't survive because you guys know that slippage issue that I had where I was trying to take a hit of like maybe sub 5 points and there were 16 extra points of slippage. Well, unfortunately, I got clapped on all of those, so I had to restart these accounts. I fortunately passed the test and then upgraded those today, but I still have those 15 that had the larger buffer, and those are looking pretty good. They're all up roughly about 7K. Some's up more, some is up a little bit less, but actually feeling pretty good about these accounts right now. So 15 of the Apex accounts doing well, 5 of them are brand new, and then I still have my funded futures network trades, which actually I don't think I turned on the bot today. All right, turning on the bots. The bots are now on, and they did not run yesterday, which was a bit unfortunate, but let's see how that plays out today. So the bots are back on. So I haven't done any trades yet. I'm just I'm trying to be calm, cool, collected. Dude, Nvidia is just ripping. Well, I was expecting my call out on Nvidia yesterday to be right, but I didn't expect it to be right so quickly. So for all of you who watched that video, the update video, I laid out the case of why I personally believe that the, what is this one? Hang on, breaking news. Justin, Trump and Xi are set to meet Thursday, 11 a.m. in South Korea. What time zone? So that puts it at 10 p.m. on what? Okay, so they're meeting at 11 a.m. local time in South Korea, which if you were on the East Coast in the U.S. is 10 p.m. tonight. So basically, we have crazy this morning. Then we have the FOMC results at 2 p.m. Jerome Powell speaking at 2:30. Market closes at 4. At 5/5:30, we have 3 of the major Mag 7 companies reporting. Then at 10 p.m. tonight, we have President Xi and President Trump meeting. Then we get up tomorrow, and then we have the market reacting to all those developments. And then we have even more Mag 7 reporting tomorrow. So you can see between now and tomorrow night, yeah, it's just going to be nuts. It's going to be absolutely incredible. Wow. I hope you folks are ready. Here's a look at Bookmap. We'll be coming back to this throughout the day. VWAP is down here at 250. You have the point of control up here at 270. We're on top of both of those. I just got an alert from Apple. How is Apple doing? Apple, I believe that's a new all-time high. So that's the world's second biggest company, doing very, very well. And then this, actually, no, Apple is third, while Microsoft is second, taking a little bit of profits there. So the SPY is battling it out at yesterday's high, which is the all-time high. And since it broke it, that is a fresh new record today. And the NASDAQ gapped up to a new all-time high. There is a downside gap fill to 634.68. I'm saying that, but to be fair, there's a lot of downside gap fills. Look at this. We have a downside gap fill to, here, let me mark this up. You have 4 downside gap fills in a row. You have a downside gap fill to 634.68. That is the high from yesterday. You have a downside gap fill to 628.55. That is the high from Monday. You have a downside gap fill to the high from Friday. And you have a downside gap fill to the high from Thursday. 1 gap, 2 gap, 3 gap, 4 gap. 4 gaps in a row, all making new all-time highs. I don't believe that has ever existed before in the entire history of the U.S. stock market. That is statistically insane. This has to be a multi-standard deviation event. Like, we might be talking... The likelihood of this is a snowball's chance in hell, folks. It's a snowball's chance in hell. Absolutely incredible. All right. As we're waiting for this to go, we're about to have that 10-minute Orbo. At that point, some of these bots should start running if they're working today. I don't know if they have off or not. We're going to be finding out very shortly. But these top 2 accounts, my Funded Futures Networks accounts, one is up almost 9K. If this one hits today, it'll actually be good to go and pass on to the next one. While this one, I've been playing it a little bit smaller. We're making a video in the background. So this one's doing well. It's hit every trade. We're just waiting for a little bit more data to be collected on it. So waiting for that. Those are attempting to trade the 10-minute Orbo. Bullish, 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 bullish. Okay, let's zoom in on all of this so we can see a little bit more. Classic price momentum. We're above all the EMAs. So price momentum, price structure right now dominantly favoring the bulls, especially on the 30-minute and on the 4-hour. Let's zoom in on all of this. Okay, cool. So that's the structure. Like I said, here are all your key levels. I'll zoom in on this just so things are a little bit easier. We have that. We have this. All right, cool. AMD is also having a great day. New all-time high there. It's actually up the most. Well, it's behind Nvidia. Nvidia's up the most, gapping up, new all-time high, followed by AMD. Avago's having a good run as well. I believe that's another new all-time high on Avago. So the semiconductor sphere is looking very good. Tesla is actually slightly red. Palantir hit a new all-time high on Monday. It's not that far away from hitting a fresh one today. What else do we have that's exciting? Microsoft is break even. Be careful of Microsoft's downside gap fill. Apple hit a new all-time high today. All right. Hood. Be careful of Hood's downside gap fill to 142.20. Oracle putting in lower highs and lower lows. It has a very evident downside gap fill to 243.49. This is the gap from the earnings, but it's just been bleeding off ever since that earnings gap up. CoreWeave not doing much. Oklo potentially putting in a lower high. Coin potentially putting in a lower high. Hut potentially putting in a lower high. Netflix, after getting murdered, having a little bit of a bounce back. Meta, I had a target here at 760. There's a downside gap fill at 740. That has earnings, so be careful with that one. Rumble not looking the best. Open potentially putting in a lower high. Qubits, lower high. Rigetti, lower high. IONQ, lower high. So quantum computing taking a bit of a hit. MSTR definitely putting in a lower high. What do we have? XRP hanging out at 270, not too much there. Solana 200, not too much there. Texas Roadhouse try to have a nice rally, recently getting a bit hit. Bonds are nicely recovering, obviously. Oil chilling at 60, Ethereum's at 4,000, Bitcoin's at 113,000. Looks like it's putting in a lower high, but might just be trying to create a foundation here at the EMA cloud. So, okay, vol is slightly elevated. Vol bouncing off of 15.6, so vol's coming up a bit. Interesting. SPY is looking strong. You might have had this little fake out dip here in the Qs. If we start, okay, we're in the 10 minutes, so now we could play that 10-minute Orbo. So the bots, if the bots are working, they should be playing this. If we get a breakout, not a breakdown, if we get a breakout, the bots should fire. They should fire. Gold, IWM just caught a bid. Gold is getting hit. Where do we have IWM? IWM, I need to, okay. So IWM has a downside gap fill to 247.12. I'm actively trying to play that right now. I do have short-term puts just for this downside gap fill. My thesis is that why everyone is fascinated with the tech sector, I'm expecting a little bit of a pivot out of small cap. So that's in a very crude way, that is what I'm looking for. I believe Palantir just got a new all-time high, so congrats to everyone who is playing that. PLTR, new all-time high. All right, here's a look at the flow thus far on the day. All right, here we go. Here's price. Here's the flow kind of on the bottom. You can see up a little bit, down a little bit, nothing too crazy. And then here is what we're seeing in the S&P 500. The white is the next expiration, while the purple, as you're used to, is the all expiration. So price is going up, but delta flow not that much. If you're used to the previous one, this is what it's looking like. You can toggle back and forth. It's just kind of user preference. It's whatever you like. So I could switch back and forth and show you guys whatever you guys are a little bit more biased towards, whatever you're a little bit more comfortable with. But hang on. All right. Not too let me go over to the Mag 7. Yeah, we're not seeing too much delta sway one way or the other. We're not seeing a strong trend. We are arguably in, Palantir is really going. You are in the SPY. The Qs are not trending at all. They're not trending in price, and the Mag 7's not trending in options. So nothing too crazy going on there. Nvidia's looking strong. AMD's looking strong. Avago's looking strong. Palantir's looking strong. SPY's just kind of chilling now. It had 1 minute sell-off, 2 minute pop, going flat. The Qs pop, they drop. Now we're going flat. So as of right now, really not that much of a trend at the moment. And I do not expect that to last for long. I mean, I think today is going to be a wild day. I think there's definitely going to be movements and trends. So I think this is a momentary thing, and just wait for your perfect opportunity to strike. I deeply, deeply believe that. Mag 7 starting to pop now. SPY is starting to climb up a little bit of 10 minutes into this. What's up, Piper? Piper is in between napping and in between wanting to fire off some trades. Folks, if you want to trade with someone else's capital, right now, the best financial offer for you guys is Funded Futures Network. You not only get 50% off the evals, but when you buy one, you get another eval for free. So 50% off, and it's buy one, get one. So really, basically, you're getting 2 accounts for a 50% off deal, and there's no activation fee. Just make sure to use that code Goonie. It's pinned to the top of chat. It's in the description of the video. And those are, I have 2 right here. I bought one. I got the other one for free. That's the BOGO deal. Buy one, get one. And when you pass it, there's no activation fee. So check that out. Apex was the best deal as of yesterday, but that deal concluded yesterday. So right now, this is the best deal to offer to all of you guys. So check that out. It is pinned to the top of chat. It's in the description of the video. The SPY's ripping, folks. Where are we at? The top side of Captain Condor is there's a new play. Okay, this is brand new as of market open. Hang on. Breaking trade alert. Attention, attention, degenerate gamblers alike. There is a breaking trade alert. There is a breaking trade alert. There is a brand new call credit spread, a CCS, at 6965, spread by 6970. For those of you who are curious about size, it is coming in at a, 13.5 thousand. Once again, breaking trade alert. There's a brand new call credit spread, 6965, spread by 6970, 13,000 contracts. Wow. All right. We got them chalk that up. 6965. 6965. All right. We'll slat that one. That was not there in pre-market. That's been made since market open. Coordinates 6965. Thank you for your attention on that matter. Thank you. Thank you for your attention. So right now we are testing the initial Captain Condor, the one that is awkwardly spread by 10. It's just abnormal. Generally, it's spread by 5. This brand new one is spread by 5. A lot of positive gamma up there. In fact, it's probably changing the structure. But anyway, we are testing this one right now. These players do not want this to happen. I want to be very clear. This call credit spread benefits if we end the day below 6915. This play up here benefits and makes full profit if we close the day below 6965. This is a below bet. This is an under bet for my sports gamblers right here. Same one. This one down here, basically, you want it on the other side of the purple. So right here, you have the purple and the red, the purple and the pink, whatever you want to call it. You want it on this side of the purple, right here, purple and pink. You want it on the south side. But see how this is the opposite? Purple's up top. Basically, the purple relative to the red, you want it to be in that direction. So purple is below, you want price below. Purple is below, you want it below. Right here, purple is above, so they want it above. So really, the market as of now would love the day to conclude below 6915 and above 6850. And other people have a different bet of still above 6850, but they want it below 6965. So somewhere in this region is where they want the market to be. Now, that's what they want. And just because you want something doesn't mean it's actually going to happen, as we all know. They've been actually having a really, really rough weekend. Depending on how today goes, it could end up being even more rough. The Mag 7, the options flow popped a little bit. We're giving a bit of it back now, and the SPY as well. We popped from 940 to 945 and giving a little bit back. No clear trend quite on the day. No clear trend. So let's just wait and see how things play out. Remember, Brent from Spot Gamma is going to be giving us his thoughts and opinions, a breakdown of the market today for not only the Mag 7 earnings tonight, but also for the FOMC decision today. And they're going to be going through kind of a quick tutorial. They have 4 to 5 new tools and services that you guys can all use for free. So if you want to claim the free access, it's a limited time. It's pinned to the top of chat. It's in the description of the video. Once again, this is free access for you guys to all test drive it. And why not test drive it for today? You can use it for today and tomorrow, as in you'll get full access to the Spot Gamma suite for all these new tools, for all the existing tools, for the FOMC decision, Mag 7 tonight, the president's talking in South Korea, and all the stuff going down tomorrow. You're going to be able to use this for free right now. It would be, in my opinion, it's insane to not use it. This is free access to help you through what's going to prove to be a very, very crazy day. A very, very crazy day. Palantir still going. Nvidia is holding. Palantir is looking good. AMD is looking good. Avago is looking good. Wow, that's nuts. That's absolutely nuts. SPY coming up to testing this little shelf here. Watch all these recent lows. It's maybe testing the bottom end of its the range ever since market opened. So we kind of dropped, popped, and then we got ourselves into this range right here. This is what I'm here. I'll color it out. Makes it a little bit easier to see this white box. Let's see. You could argue this was the box. It tried to break out of it and just got smacked right back into it. So now we're just, for all my Don Chain traders, we're just kind of waiting to see how this goes. And honestly, I would argue all of the price action today in the NASDAQ has only been a box. A little bit up, a little bit down, a less up, less down, just no clear trend. So for my day traders, my scalp traders, first of all, just be aware of the fact that, yes, obviously, we have some craziness coming down this afternoon. But even if you're trying to just get a little scalp trade in this morning, not much is going on. Not much is going on at all. So we don't have to do anything too nuts. So this is actually a perfect opportunity while we're waiting for something to actually happen here. What questions can I answer for you? Do you have questions about SIM funded trading? Do you have questions about the Goonie Trading Discord? Do you have questions about any of the Greek things? Do you have questions about spot gamma? Do you have questions about where babies come from? Do you have questions about Piper? Do you have questions about my trip to Switzerland? Do you have questions about my marriage? Is it open? Is it not open? Do you have questions about my hair product? Do you have questions about where I buy my shirts? Uh-oh. Wait, what? Strategy submitted in order that generated the following error. Unable to submit order. Strategy has sent cancel request. Unable to submit order? Why? All right, I'm going to screenshot this because this is the second day in a row that the bot didn't go. And honestly, I'm not going to complain. Oh, wait, we're right here. Sell order stop price must be below. So it's something with the price. I try to put in a new following. All right, hang on. Well, any hoozles, I guess I could just... Oh, wait, it is trading. It did get the order in. I'm very, very confused because as you guys saw, it aired out. These are just the bots. That's strange. Well, here, I could fix this
Order
one.
filled.
This isn't hard for me to fix because I mentally know what is going on. So it needs to go for 8 points. Where did I get a fill? 82. So it's targeting
filled.
300. And then the other one's going to just be the runner. So the initial scalp, that 10-minute Orbo trade, it did hit right there, locked in 195. I don't know why it gave me the warning that things didn't trade. It right here, stop, cancel, close. Okay. So basically, I mixed the 10-minute Orbo, which already hit for 195, and I mixed it with some of the logic from Icarus, but I guess I must have broke something because it got in and then quickly closed it. But anyway, I know what it's supposed to do. So it's supposed to have an 8-point target. So that's 300. And then as soon as that hits, it's a move to stop, the stop to break even. And then from there, it's just, if it's a runner, it's a runner type of a deal. So basically, the one bot ran, the other bot tried to run. There was a weird error. So I just manually executed what the bot was supposed to do. And that's what you currently see on the screen. That's what you currently see on the screen. Where do babies come from, and do you have any in the works? They come from big birds that are referred to as storks, and I do not have a stork request in at this moment in time. I have a question, Matt. Do rebound relationships ever work out? Yeah, sure. Why not? Just, it's all about the passion, you know? At what point is it not a rebound? We're all rebounding from something. Can you check Netflix flow to look to trade the upside gap fill? But the flow would just be the intraday flow. That wouldn't tell you. The upside gap fill is going to take time. So I think that's not the appropriate tool for the upside gap fill. How do you feel about dividend strategies, and do you hold any in your core portfolio? I have a little mini dividend portfolio, so I like dividend strategies and dividend portfolios, but I leave it in its own portfolio to do its own thing. And if I'm being completely honest with you, I got a little bit lackadaisical with it. I should be a little bit more of a serious dividend investor. So that's on me. I wish I paid more attention to it. I wish I was putting more money into it. I do like it. I am a big fan of whoever sort of the DRIP, D-R-I-P methodology. I'm a big supporter, big fan. I just wish I paid attention more to mine and put more money into it. But my one tip would be make it independent of your other portfolios. Just it makes the management of it easier. with all of your investments and trades, how close are you to making your first
Target
million?
filled.
I don't know off the top of my head. Recently, I was closer, and then 2 weeks ago, that day that we had the big drop in the market, ever since then, I gave quite a bit back in my account. My swing account was up 300% year to date, and now I can't complain because I'm up 100% year to date, but it took a sizable hit. So I guess I hope no one takes this as me complaining because I'm still up on the year, but that hit was a multi six-figure hit to me. So that was not chill, not fun. Anyway, I'm manually doing what this strategy would have me do anyway. It locked in its profit, stop is set to break even, and now the runner is just on. And that's what the bot was supposed to do. So even though I'm manually updating it, that was just because of the weird error. And that's the runner that you see here. So the basic Orbo strategy locked in 195, the other one locked in 90, and it has a runner on right now. So it might be doubling up soon, but we're going to be finding out. All right, the Qs are a runaway train. Nvidia is also looking good. Palantir is looking good. Looking at SPX, we are now in this potential crazy zone of what in the world's happening. I'm watching 6925. If we do get that breakout, the next level is 6950. And just so you know, there are people playing 50, and there's a new call credit spread in at 6965. So please pay attention to that level. Please pay attention to it. But if you were riding this up, for example, if you took this trade right here, if you were bullish and you're like, okay, I waited for the pullback, the breakout, and you took this trade right here at 951, risking the recent low, that's a good trade. And I say it's a good trade because let's just say you're seeing this. Okay, so you generically are arguing for the upside trend. You're like, okay, we ran into resistance, got knocked. Ran into resistance, got knocked. We seem to have support. If on the next bar, you're like, okay, I'm taking this trade. And once again, this is us not knowing where the market's going to go. You take a long at 6913 and you're risking 6910. You're risking 3 points. So the risk reward is pretty favorable. You're basically betting on the breakout of 6915 to 6925. The fact that we got the break of 6915, you can now have your stop at break even. And now this is a freebie play. This is a freebie play for you to play it all the way up to 6925 because you already got this first break. You had minimal risk. The risk is now 0. This is a good play. This is 100. If you took that, I didn't because I was chit-chatting with you guys. But if you took that trade right there, this breakout bar at 951, that you should already be moving your stop to break even. Already be moving into break even. At least in my humble opinion. Obviously, I'm not your mom. I'm not in control of your money. You should do what you think is appropriate. But from a risk reward perspective, that's the best way to do it. Free my boy Trex. Trex is not banned. Trex was literally talking here earlier today. What are you talking about? What in the world are you talking about there, Tonto? Has anyone having issues with public this morning? I could check on mine. Hang on, let me see. Let me check on my public. Hang on, I'm loading in. No. Mine are all, hang on, let me just double check these prices. Yeah, mine are all good. Haterade. Maybe just kill the app and restart it. I'm not having any issues. Gold and silver. Gold's popping. I was looking at gold earlier. I was thinking about getting GLD. I want to wait for the FOMC talk, but I'm thinking maybe I missed this gold pump. I tried a little bit of gold right here, quickly got knocked out now that we came down to the 50 EMA. Is anyone else thinking about going bullish on gold right here? Just like basically, oh, this is a dip, maybe a potential reversal. Basically going along here, risking the recent low. Is anyone else thinking that that's a smart play, or am I the crazy one? Dude, Nvidia's popping again. Look at right here, the Q's ripping. This never got tagged. Dude, this runner's running. See, this is it. You don't commonly catch runners, but when you do, it makes it all worth it. Look at that. I'll move the stop up, and now it's just a following. So you guys have watched me trade quite a bit here, and you know that a lot of the times with my runner one, it just gets knocked out. And then the question is, well, why do you let it do that when you could just lock in both at that first target? It's because every so often, roughly 30 to 40% of the time, which is not often, it doesn't happen a majority of the time, you catch a big runner that makes it completely worth it. And in fact, it's actually stupid that I'm still trading this because I'm actually above the profit target to pass this. So I should close this out. You know what I'll do? I'll lower the target. We'll just put the target at 30. But I'm already past the 9,000 target. So there's literally no advantage for me to continue to trade this. Like literally whatsoever. So, hey, that's a little bit about me. But FFN, I'm new to like testing them out, trying them. I've been having a great time. If you guys want to check it out, remember that code Goonie. Not only do you get 50% off, but when you buy one, you get one, and there's no activation fee. Pinned to the top of chat in the description of the video, as the market is on a runaway. Like I said, if you took this trade here, that's the only thing that I would consider to be a quality trade thus far on the day. If you took this trade right here, your stop, if I were playing it, my advice would be to be break even, but hey, play it how you think is appropriate. My first target would be 2.5, and then maybe that's a scale out, and then my next one I'd be looking at 50, but there's a good shot that there's at least some profit taking right here. Let's see. When we get to it, it's this giant negative gamma node. Captain Condor is getting destroyed again today. That Discord, it's a Discord. They must be down millions of dollars. Just because they're a large Discord in terms of how much market money is behind them, not market. That does not mean, I don't think that they're actually, I'm pretty confident in saying that they are not net profitable, because how many times have I streamed to you folks them just getting blown out? What platform are you using for FFN? Ninja. I do all mine on Ninja. Nate. Does FFN have a monthly fee? I believe it depends on the type of account, because there's various accounts, so I don't want to give you any inaccurate information, but there's multiple accounts you can pick, and I don't know if it's consistent across them. So you could either go to the FAQ, or they have a very fast chatbot thing, so you could just ask the chatbot, but I just don't want to say the wrong thing, because I know they have not just multiple account sizes, but types of accounts, and I don't know if it's consistent across all of them. So I just don't, I'm hesitant to say the wrong thing, and then you get mad at me. I could take a random guess, but all right. A little profit taken starting here. The delta very strong ever from 950 to 10. Are we seeing that classic 10 a.m. reversal? Are they going to hit us with the Kansas City shuffle? The 10 a.m. peak just to dump it on us?
Order submitted.
All right, close
Order
that
failed.
out. I just wanted to close it out as it was above 9,000 in profit, as a profit of 9,300, just because that's where you're passing it. So it was silly for me to let it go beyond that. So thus far today, locked in about $500 on the bots. I manually traded it, but one traded fully automatic, and the other one I just executed exactly what the bot would want it to execute. And now Palantir is still looking great. Nvidia is looking great. The Russell's bouncing back a little bit. SoFi is down. Hood is up. Avago's up. AMD's up. Palantir's up. Tesla's now back in the green. How is Tesla doing intraday? Tesla, strong recovery. 457 all the way up to 465. Golly. Maybe my PLTR long calls broke the calculator. Maybe. Uh-oh. This is looking like throwing the ball up, and now gravity's winning. We might be doing that. Uh-oh. The Qs just broke that wick. Hang on, Tonto. Things might be getting a little bit saucy here. We might be seeing that classic 10 a.m. peak. How many times have we been seeing this together over the past month? This seems to be the most reliable thing in my life, the 10 a.m. reversal. Honestly. Crazy. Did anyone play the 10 a.m. reversal? I saw some people. Andrew, you were calling it out. Someone else was calling it out as well. SpaghettiOs. We got up into the zone, couldn't fight it out, spit back out. Your support is here at 6911 and on NQ. Oh, shoot. I did not mark out that pre-market, the overnight trading high and low. we're struggling at the 4:20 a.m. high. We tried to bounce above it, and the market said, "Not on, brother. Not on, brother." All right, so we are back into the overnight session. They tried to get that break. It said, "No way, Jose. No way, Jose." Mag 7, same thing. The delta flow ran till 10. It's getting unwound. S&P 500, similar situation, ran till 10:01. Currently getting unwound. It actually just took kind of a sizable hit here. Sizable hit. Well, golly. Golly, folks. Man, right here, this short at 300 would have been nice. You waited for the breakdown, a little bit of a bounce back into the EMAs. So right here is what I'm talking about, because right here, price broke this recent low, went a little bit further. You don't want to chase it. You wait for the bounce. The bounce failed. You go short at 301. Your risk is 308. You were already 20 points in profit. You set your stop to break even, and you move on with your life. If you get knocked out for break even, so be it. If it runs, great. You made a bunch of money. I don't normally take those types of trades. For me, generally, I wait to see how the EMAs flip, because right here you have the 10, the 20, and the 50. See how they're starting to flip right here. Now we first have the 10, the 20, and the 50. So I'll be watching this structure. Is it worth the risk? 93. That's not bad. I mean, taking the short here, taking the short there. I wouldn't mind an additional push into the EMA cloud just to make sure it really wants to reject it. But that's that's not even a 10-point risk if this works out. It's such a baby risk. Oh, the risk reward is just so phenomenal. Do I do it? I'm really thinking about it just because the risk is so small. The only thing I don't like is 300 is a key level, and you would think that maybe it wants to retest it. If a key psychological level wasn't right here, I think I would have already taken this short just because the risk is so small that, oh, I'm torn. I'm so torn. All right.
Order submitted. Order.
Why is it taking so long
Order
to get
submitted.
these in? What is to do 7 points? Where am I short? Horrible fill. 65. Wait, what is this risk? 93, 13, 15. All right, I should go down to 60. All right, here is the name of the game for me, is basically get this fill at 60, and I can move my stop to that recent high. Right now, I'm giving myself a little bit of breathing room right above 300, just in case it wants to do like a quick test of that and then puke. But really, I kind of wish I got in here at 86 instead of 79. It moved a little bit fast, and you guys even saw by the time I hit it, it was like an awkward delay to like actually get my order in, which was the same weird issue I was having yesterday. But hey, it is what it is. It is what it is, but I'm trying to take at 60, and I'll move my stop either to this recent high or I'll move it straight to break even, and then I just have a runner. So I'm playing it kind of the opposite. And if this singular trade goes according to plan, I will be done on the day. On FOMC days, I actually find it's best to literally do nothing. And as you can tell, I'm already doing something. So I just, in my own history of trading, I do not mix well with FOMC days. I just don't. So if I can somehow just get one trade in and out done in the morning, it is far, far easier for me to do nothing for the remainder of the day, just because, once again, I have it in my journal. My history of trading on FOMC days is it's big gains and big losers, and it's a lot of stress that basically either nets out to being nothing or a slight loss for me in terms of my own like just net worth. So it's not a good situation. It is. Oh, come on. I popped right back into the cloud. I kind of just don't want it to recapture this cloud, but I am worried about the 300 test. We're going to see how it goes. Hey, the trade's up there. I'm not taking on the most risk. It's survivable if I get hit. It's survivable. We'll see. The little bounce here is the SPY trying to protect itself at the high. See how we just have this shelf perfectly at, what is this, 688.75, just support. The SPY is once again at the support level. So it's not crazy that we're seeing this little bit of a bounce. I was hoping that the Qs would dip a tiny bit more just to give me this fill, but you could argue maybe I was a little bit early, but it is what it is. Someone is asking, where's VWAP? VWAP is down here at 64. Oh, that's a good call. The target I need is just beyond VWAP, so I technically need a VWAP breakdown. Maybe I shouldn't be that greedy. All right, I'm moving it up to VWAP just in case there's an initial bounce right there. But we're actually seeing a bit of a bounce right now, unfortunately. What is this high? This high is 08, so I'm moving mine to 09. So this high, the recent high is 308.5. I'm playing it off of this high. And thank you for calling that out, whoever did. When I first checked it a bit ago, I thought it was at 60, which is kind of why I had it at 60. I didn't realize that it trended up by about 5 points. A lot of sellers up here, all the way at about 328, something like that. You have the point of control at 75 and you have VWAP at 65. So I'm moving my first profit target up to 65. And obviously on the fill of that, I could either move it to break even or I can move it to 92. Those are both valid. If I had 3 contracts, I'd unload one here, I'd put one to break even, and I'd put one at 92. No fucking way is this happening to me again. No way. 65.25. Are you, folks? Does this happen to anyone else? Does this happen to any fucking other person? It gets as low as 265.25. My order moved way before it got moved up to 65. Uncanny. Fucking, like, truly unbelievable. One tick. Dude, this is what happens on FOMC days. Something like that happens, and then I get tilted. And then your boy gets tilted. I just have to not let this change what I'm doing. I just have to. That's insane. That's a brutal beat, dude. Stream snipers? Yeah. So I got stream sniped. That's fucking, it always happens to me on the downside when I'm trying to go for my profit target, but I never get that lucky when it's my stop. Your boy can never get that lucky when it's his stop. Fuck. That is, it just always seems to cut one way. It's always when I'm trying to hit my target. Like, are you that would have hit. I would have moved my stop to break even. I would have locked in 13 points, about $250, and then this one would have been knocked out. And instead, now I'm carrying. That's crazy, right? Like that's like actually crazy. Maybe I need to do something where whatever I think is appropriate, just always do +1. So like right there, I'm like, oh, I should move it to 65. Maybe I should always do +2. Maybe my rule should be +2. Be like, oh, 67. Maybe I need to outsmart myself here in this one. Is like, I'm always looking for a certain value. Fuck, if this saves itself here, that might be a higher low off of a VWAP bounce. Do I need to ditch this? We trend down, 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 down. We bounce. We just made a higher high. This high right here took out this high and this high. So I very much care about the depth of this pullback, and it seems to be finding a bit of support right in these EMAs. So we might have a higher high and a higher low, as in I am against trend. Uh-oh. This is not... The SPY is retesting that. It did this little fake out breakdown. It's retest. I mean, this could go either way. The 10-minute right here, we had the break. It bounces back up to its 10-minute Orbo. Palantir is looking good. Even this Nvidia cracked all of its lows, but it's bouncing up. So this is 50-50. We're bouncing back up to a key level, and the question is who wins out. So I have a 50-50 shot here. I have a 50-50 shot. So it 50-50 shot. It comes back to risk reward management. This is exactly 300 though. They're like, people love playing these technical levels. They love playing these technical levels. Fuck. That's a brutal one. One tick away. When's the last time I streamed something to you and I didn't have like a brutal beat that wasn't within like a point? It happened yesterday, happened the day before. It's already now happened today. Like, you know what? I think you guys could actually use that as the ultimate trading strategy. Is since I'm streaming it to you live, you know where I'm trying to get a fill. You should fade it a point away from my fill. If you're like, okay, Matt is trying to get out at 65, you could have gone long at 66 and you rode that up basically 35 points. I think that is like, I think I'm streaming to you the ultimate winning strategy is wherever you see my profits, just do the opposite at that exact moment. I think you guys might actually gain so much wealth that it would be scary and you wouldn't know what to do with it. All you have to do is look for my green lines and be like, cool, I will do the opposite right before that. That is, I think it's the ultimate trading strategy. Which way do I go? You'd go the opposite. So this was a short, so you would go long. It's a buy for a short profit target. So you would have played the bounce off of it. I think that is the ultimate. The reverse Matt Kohrs trade. It's the reverse of where I'm about to get it. Because it feels like at a certain point it goes well and I'm about to get my profits. So it's kind of a nuanced reverse. It is a reversal, but it's a reversal right off of where I'm about to be profitable or about to lock in my profits. That's the key thing. I think you guys would have unlimited, immense wealth if you played it that way. Just boop, you could have been in at 66. You'd have taken 3/4 of a point of risk and you would have dumped it at 300. You could have dumped it at 92. You could have dumped it at 93 and you'd be sitting pretty. Fuck. It made a higher high, but we had like for it to make a lower low, it has to hit my profit target. I'm getting sketched out by this. I don't know where I want to move it. I could move my risk to 300. That's 22 points. So that would be, dude. I need to de-risk it. I need to de-risk. And we also have Brent coming on at 10:30. So I kind of need to be out of this play so I can fully host this chat. Do I just take this break even or do I use this risk 89? Do I use 96? All right, so that is currently carrying 21 points of risk, but I have 2 contracts. That's 40 points. So that's like an $800 loss on the day, which for my account size is manageable. It's not pretty, but it's manageable. I'm looking at this high and I'm also looking at this high. Obviously, there's a higher chance of us tagging 95. I'm just wondering if it's going to do one of those things, and we've all seen it before, where it's a quick pump to a key level and a dump, which is still why part of my mind is looking at this 09 level that we saw back here at 1003. Just in case like they want to do that quick pump and flush. What is this one? This is the 09. Oh, brother, how do I want to handle this? SPY is looking weak, so this should be an advantage to me. The Mag 7 dumped and going flat, so it's not helping me, but at least it's not hurting me. It's not necessarily pumping. The SPY is getting hit, so I'm riding this delta flow. So technically, I'm with trend. I'm against this. Oh, 5 minute broke down, 10 minutes testing, 30 minutes bullish, 10 minutes bullish, 5 minutes bullish, 10 minutes bullish, 30 minutes bullish. So I am fighting the trend of the NASDAQ, so I'm not the most comfortable with that, but I'm now with the trend of the S&P 500. What is this high? This 1014 high. That did take out these recent highs, but this high compared to that one, so that's more of time frame specific. Folks, I think I have a 50-50 shot. Had I executed the trade earlier, I think my odds would have been higher, but it's just more of, is it gonna right here? We're just messing around at this 10-minute orbo, but it's, do we take out this high or do we take out this low? I think that's where I'm at. The SPY tried to revisit its high from yesterday. The recent all-time high technically made a new one. We bounced up, got smacked. That's looking good, but we're bouncing again. Is just this a double bottom? It's which way is it up? The SPY just caught another bid. Fuck. Do I just take this hit? The price pump doesn't make the most sense to me because look how weak this options flow has been. I'm wondering, as I said to you, is that secondary fake bounce to 300 where it just wants to tag it again? It runs into all this sell side liquidity. There's a lot of people trying to sell right here. Just took those players out at 300 flat. There's a lot trying to sell at 324. That's a strange level, a very strange level. Do I just move up to those guys? Do I move up to 324? Once again, how am I coming up with that level? Because I can see someone's trying to sell 500 contracts at 324. I don't know if, but in the event that I'm wrong on that, I don't know if I could take that big of a hit. That's a big hit. I don't want to take, that's a little too much for my buffer size. If I had more buffer, yeah, maybe. If I had more buffer, maybe. My life would be far easier if we just clearly reject 300. I needed to take out 76 this recent low. If we reject here, it's a double top, and we take out 76, I can manage that. That's not bad. Because then I would just definitively move my risk down to a slight break above 300. The issue here is ever since this VWAP test, where once again, I was one tick away from getting filled. My buy order was in there before we got there. And now I'm in this like bullshit situation. Not bullshit. It's obviously still all my fault. It's just a bit unfortunate. That's just one tick. Like, come on. But maybe the market gods were frowning. Someone said Tesla getting clapped. Well, the Tesla getting clapped comment is now aligning with a potential double rejection here at this key level, where once again, we saw a bunch of sell side liquidity, and obviously also a shout out to Spot Gamma showing us that right here, the delta is tilting to the south, and so is the Mag 7. All right, maybe a double top on the SPY, maybe a double top on the Qs, maybe. It could also just be a fake out, a vision of grandeur here, because we're still... I'm seeing these higher lows. All right, this is the consolidation that I'm mainly paying attention to. So we have lower highs, higher lows. We try to get a breakout, ended up being a double top, but then we came just to the bottom of this one and then bounced. So I don't know. I maybe have a 5% edge. When you have consolidation, there's about a 5% edge in the consolidation breaking in the direction that you were coming into before it was made. So we were trading downwards, then we consolidated. So there's about a 5% edge that it breaks to the downside. If you look at the internet and whatnot, they say that there's much more of an edge, which is just inaccurate, but this is just what it is. This is just it. It is what it is. And we're actually just stuck at the EMAs. The red line, the white line, and the kind of blue teal line are the 10, the 20, and the 50 EMA for the 500 tick. I'm on the 500 tick chart right now. We're consolidating. Unfortunately, my fill, which would have been way better up here at 301, well, that's perfect because I could be using, oh, that was such a good entry. Granted, you had to be a little bit early. You had to be a little bit ballsy, but that was such a good entry. You waited for the sell-off, the bounce, the smack. You're in there. You're taking on 7 points of risk, and now you have resistance. You set it to break even. You probably already scaled out one. Oh, that was, ooh. If you took that trade at 10:04, congrats. Like that's a chef's kiss. If you took this trade right here, let me sign up for your Discord, brother. That was a trade. That was, dude, you're slinging it. You're slinging it today. You got a sack the size of Manhattan. That was a good trade. That was a great trade. I myself happen to be far later. And it just keeps bouncing off my break even. Shoot. Every time it bounces off this break even, I really do question, should I just scale out one just to... You went long at 10:04? Well, not necessarily the biggest fan of that. I was a fan of the short at 10:04, so negative claps for you. Negative claps for you. And now, folks, team. We have ourselves in a bit of a pickle. It's actually a two-part pickle. Part one of pickle is I'm in this trade and my good luck charm, my cat, Piper, who is the chief investment officer of my hedge fund, has left. So we no longer have my good luck charm. And I'm also not wearing a Buffalo shirt, so I don't even have something small to counterbalance this. So that's a problem. Problem number two is the fact that Brent from Spot Gamma will be joining us very shortly as I'm in this live trade, and I don't want to be the rude person trying to actively manage it during an interview. So I need to decide where to set the risk. Ooh, this is we're getting into a pickle here. We're in a bit of a pickle, Dick. We're in a bit of a pickle. And actually, all right, here, let me get this up and going. For the meantime, let me cut this over here. You guys can see this. You already know where I'm in and where I'm not in. Let me just make sure the video is right. Let me get Zoom up and going. All right. Cool. We'll make this big. All right. We are good. Allow participants to share screen. That's always important. And then enable. All right. So I think I did it properly. We have this. All right. Well, just if you guys want to know, I'm short 2 contracts on NQ at 279. Right now, my stop is at 310. I'm not feeling the best about it just because it seems as it's become a 50-50 opportunity. I was a little bit slow to react. Of course, I might get lucky and it might break my way. Maybe I have a slight edge. All right. Hang on. We have this. All right. Uh-oh. Hang on. Hold on. All right, we're just waiting for Brent to join up. We're waiting. Anyway, to review the position, I was a little slow to react. Like I said, the trade seemed to be at 10:04. There was about 7 points of risk. At this point, you probably would have already locked in one and had a bit of a runner or something along those lines. Sold off. And now we're just consolidating. And unfortunately, technically we're making the same highs, but we're making higher lows, which is what I find concerning. So even though we were trending down, that is offset by the fact that we're making higher lows. So it's becoming very rapidly a 50-50 opportunity, very rapidly a 50-50 opportunity. And the SPY's picking up here too. Yeah, it's just basically, are we going to get rejected at this range? That's my 50-50. I was too slow. We'll see. But anyway, I'm short at 79. The current stop is 310. My first target is 65, which is VWAP. And then there's just an arbitrary reach target. Arbitrary reach target. And let me see what's going on here. For those of you who are curious what's going on right now, Brent, one of the co-founders of Spot Gamma, is going to be coming on, and we have a great full-fledged conversation. We're going to be talking about brand new tools and products, what to look for the FOMC meeting, and we're also going to be having a discussion about Mag 7 as well. So a lot of Mag 7 earnings coming up. In fact, who is on the docket for today? Hang on. Let me get this set up. Folks, hold on for one quick second. Let me get the interview set up. Brent, how are you doing today? What a day we have in store. This feels like the Christmas for traders. It really does. I mean, what does this day, this week not have? We have these giant geopolitical developments with trade. We have monetary policy decisions. We have most of the S&P 500 reporting this week. We have, I think officially now, we have our first $5 trillion stock. You guys at Spot Gamma, personally, my own favorite options analytics tool, new products. And we have you here to break it down, a former European model. So what else could you have, you know?
We hope for is right. Screw world peace or something like that. Right?
That would be asking for a little bit too much. But honestly, very, very happy that you could join me today on this, just because I think there's a lot of questions, apprehension of like what is going on, what is not going on. So for those of you who don't know what's happening here, this is Brent, one of the co-founders from Spot Gamma, as I alluded to before, my favorite options analytics tool. And pinned to the top of chat, in the description of the video, you can have a limited time free access to all of their new tools. So that hero tool, when we're watching the delta going up and down and we're talking about the key levels, for example, when I called out the iron condor today, and then there's been a brand new one created throughout the session, that's all via Spot Gamma. That is the tool that I'm using. And we're here to talk about not only new products, but we're going to get a little bit prepped up for the FOMC meeting, Mag 7, maybe a little bit of the craziness of what's going on in commodities. I see gold bouncing back. So that's kind of the TLDR of what this is about to be. And obviously, Brent, the fact that you're taking time out of your very busy schedule to chit chat with all of us degenerate zero DTE traders is very kind of you.
The degenerate zero DT, those are my people. So I'm glad I can hopefully meet some more of you guys. Man, there's a lot. So first is you mentioned today. So let's just talk about today. You mentioned the new condor that came in. So there are three big levels for today, and it's to the upside. You got I can't, like, the numbers are changing so fast in the S&P. I keep misstating. Like, we're now in the 69 handles already. So 69, 65 is where there's a new about 20,000 lot zero DT trade above. So that's the major. Hey, let's say Powell just is like gives us the most bullish outlook he could, or most dovish outlook he could. I think that's the big strike for today. Then you got 7,000, which everybody's watching probably for the end of the week, assuming Trump Z goes fine. And that's a big, 1% plus move into the end of the week. So for today, 69.65. And then at where we're currently trading 69.15 is a 12,000 lot call spread for zero DTE. So the market really kind of pinned to that this morning. And then if Powell upsets the apple cart, 68.50, I think is where we would tag, and then we would probably do that pretty quickly. So those are the three big levels for today. You can express those trades right now, like call spreads or call flies built around all of those strikes, or put flies around all those strikes for really reasonable prices at the moment. Because I don't think the market is oddly pricing in moves that are quite that big on the day. So I think zero DT trades are pretty interesting for today. And also, if you put a zero DTE trade on right now, there's very limited decay until 2:30 because of the FOMC. So it's like it's unlikely that something happens between now and 2 o'clock, but like it's kind of free to put that trade on, right? So that's what the current kind of like day position is. Now, if you just take a step back from that, there's a lot of just banana stuff going on in the volatility market, and to me, it pains me to say this because the market's so bullish and you hate being the guy being like, hey guys, there's a lot of problems right now, but there are screaming overbought signals all over in terms of the option space in this market. I don't think anyone here would necessarily find that surprising, right? But if you look at call prices relative to puts, they're super rich. If you look at, we look at this correlation metric all the time, which measures single stock options prices versus index S&P prices, and that's at levels that are as stretched as they've ever been, really, right? And the last time we saw a similar metric to this was October 7th. We put out like this big risk alert and we said, hey guys, like be concerned about this because the options prices are telling us that like a volatility spasm or like a breakdown could happen. And then on the 10th, Trump tweets something that seemed like fairly normal for him, and the market just kind of, just puked all over itself. So that same dynamic is at play right now. So FOMC, Mag 7 earnings, and then the Trump Z thing are all happening the next couple of days. And I think if any of those don't go perfect, like we're priced for perfection. So if there's any kind of dent to that kind of like view or vision, or even this idea that like, hey, we're priced like in Google or Amazon for like an explosion of upside earnings here. And if they like don't meet, like if they just come in as like, hey, these are good earnings, not just like, the most amazing earnings I've ever seen, then that disappointment alone, just that missing of that extreme upside expectation, could lead to a contraction. And I'm not saying we're going to sell off for the rest of the year and the year is screwed, but we all know overbought, right? Like there's a difference between like, hey, we're going to crash 5% and like we're overbought in the short term, which is what we are. And so I'm really worried about that. That risk, those risk signals are really flashing, and you can actually see some of those in the platform if you'd like.
Going off of that, I was even speaking with the community this morning of, I believe right now the NASDAQ has in a row 4 gap ups that have not been filled to new all-time highs. I'm pretty sure that's never existed before in like the history of the stock market, like brand new, like Thursday, Friday, and then that obviously Monday, Tuesday, Wednesday now. So we have 4 different gaps. They have not been filled in the NASDAQ. And also on that note, I know in your newsletter, which folks, if you're on Spot Gamma, read that newsletter, especially every morning. It's a great prep for the day. You were talking about Core 1M, and I know that's a little bit nuanced in details and like whatever. Read it on ChatGPT, get the breakdown of what it is and what it isn't. But in more of layman's terms, I read yesterday, someone was pointing out on Twitter, yesterday at a new all-time high, it was the singular worst breath we've ever had in the market. Like ever. Like it's not like, we tied it, like the worst. So this is exclusively for folks, if you don't know what that means. Like we are being carried by only a handful of names. So all of a sudden, if we, as Brendan is referring to, if I'm interpreting this right, if those names don't keep going on with perfection, the rest of them are not, like, they're maybe not doing horrible, but they're at least going sideways. They're not pricing in all-time highs. So it's interesting because on the flip side of it, and you always do a great job of calling out also the bull case, right now we haven't seen any signs actually of a Vanna rally. So if it is all priced to perfection, that could actually lead us higher as vol just continues to collapse. So like there's a strong argument that in the short term, if we're talking today, the next couple of days, maybe the next week, there's a strong mathematical argument of actually within the bounds of reasonable probabilities, we could see either play out.
Mm-hmm. Yeah, and that's the tough part of this market is this moment where call values are just dumb, right? That's where the biggest squeezes can happen. And we've already been squeezing a lot. Like, you think 15 or 20% implied vol for a S&P call, for example, is expensive, but to harken back to the GameStop days, like things kept getting dumber, right, in terms of options prices. And so, that's the tricky part. But with the options market, you can buy call spreads or call flies or whatever, and you can buy put spreads or put flies, and you can make money either way, right? It's just like identifying when you should reduce some gains if you've done well, like roll call spreads up and out, those kinds of things. Like you can adjust and readjust your positions, to express both views. And I actually think that if you look at VIX call spreads right now. I think that's the best way to start some hedges. I've recommended some of those recently, like the VIX 2030 or even 3040 call spreads, because during the October spasm on the 10th, the VIX went to 27. It was like one of the biggest jumps from the very, very quiet market to a giant vol move. That was one of the biggest jumps certainly in recent history, if not like a top, I think, 5 ever, right? So we keep getting these anomalies in the market, like worst breath ever. Biggest vol move ever, like ever is like every day. And I think that's because there's so much leverage in the system, not only from the options market, but also from ETFs. There's more ETFs now than single stocks. And what do you get on a daily basis? It's like new 5 times levered. It's like, you're probably too old to remember this, but like, what's the next best thing to 2-minute ads or 5-minute ads? It's 1-minute ads. It's like, like, let's give you 10x leverage. So that means that moves are transient. Like, we're rallying 1 minute and we're crashing, and VIX is going to 30 or whatever the next. But the other reason you want to maybe focus on VIX calls or call spreads here is that the market could go to 7,000, right? So if you bought 6,800 puts and you're like feeling good about it, and the market rallies to 7,000 and then crashes, guess what? Your 6,800 puts aren't going to do you much good, right? But the VIX is staying at 16. So if we rally to 7,000 in the S&P, the VIX is still going to be at 16-ish, right? 17-ish. So if then the market crashes, then VIX spikes, right? So the VIX is holding. So as a hedge, it may be a little bit better, and hopefully I'm explaining this in a decent way. That may be a more reactive hedge if we do have kind of a downside spasm.
Interesting. So maybe to summarize that in a way that we just talked about on the show, because the VIX is so low, even if we keep going up, it's probably not going to break 1615. However, if we break here or break there, you're going to be able to take the advantage of bouncing off that base. Like, you're saying you're not expecting the VIX to drop much more below these levels. Either we keep grinding up, or we see this idiosyncratic event and like VIX just expands.
Yeah, I mean, it's very like the weirdest thing of this rally here the last 5 days is that the VIX isn't down. Like, it's actually, I think, now up versus Friday night. But over the weekend, we had the Trump Z framework agreement, right? And everyone's like patting each other on the back, and that feels good. So like, why isn't vol contracting when that risk is coming out? Like, that's one of the big risks. And so, FOMC will release a little bit of risk, and maybe Trump Z make the best deal ever, and China's going to buy unlimited chips. And then you can have to, of course, consider that, which is why I'm not saying don't go whole hog short here. But, again, it's priced for absolute perfection. So, that's what the problem is. So we could get a nice move today, rally, and Trump Z feel great about things. And then maybe on the way home, Trump just is like, hey, China's a bunch of jerks or whatever, and then bam, down goes the market again. So I just think like things are so stretched and so levered that you just have to really watch, ideally both tails, but I think everyone right now is only playing the upside tail at the moment. And so the problem with that too is like calls are really expensive. So you could buy calls here and be right because the market keeps going up, but it doesn't go up fast enough, so your calls don't pay, right? That's a major risk of this situation. It's like, if I was going to say, hey, Matt, what's your best idea right now? And you said buy spider calls. Well, spider calls are as expensive as they've been in the last year. So it's like you and everybody else is on that same boat. And by the way, you didn't say that. I'm just throwing shots at you as an example.
I guess to dive into that a little bit more, and please correct me if I'm wrong, as we all know from our college days, the party cannot go on forever. So are you at the point of we're expecting the party to end? It's just hard to pinpoint it because right now it's so frothy to the upside. And this, to no one listening, shouldn't come across as like doomsday, the stock market's done. It's just, it's too crazy to go this much that we need to take a reasonable breather. Is that basically the moment that you're waiting for?
Yeah. And you highlighted the problem, right? It's like, you don't know, like it's going to break. I 100% believe that it's going to break, but does it break tomorrow? Does it break in a week? Does it go as long as 2-3 weeks? It's possible that it just, takes a little bit long for that. And think about what October 10th was, though. VIX went to 27. S&P, I think, was at its worst down like 2%, 1%. Like, it was hardly a hiccup in the realm of things. Like, so it was really a volatility spasm, and certain names got, pretty beat up. But it was like, what the heck just happened? And if I showed you, hey, Matt, the VIX is at 30, you would have been like, stock market must be down 5 or 10%, right? And it was down like 2. So I think that's the kind of thing here. It's like, we're in this ramp. I don't want to be short the market into year end based on everything I know now, particularly if we get a deal, a China deal, it's great. Maybe the Mag 7 earnings will just be the best thing ever. Maybe all of the Mag 7 earnings are just people saying OpenAI over and over and over again. And so the market just is like, oh my God. And we just go to like, because you say OpenAI right now and like, that's it. Stocks go up.
Yeah, new partnership. Yeah, it's just the Oprah of deals right now, Nvidia and OpenAI. You get a deal, you get a deal.
Yeah, I was like laughing about. Have you watched Silicon Valley?
Yeah,
that HBO show. And there's this circle chart with like Nvidia, and all I can think about is middle out. I can't make the hand mesh, but that's basically what the deal is. Like it's like OpenAI is just middle out right now. It's just sort of like money goes in here and it comes back and like middle out the whole way around. And and so anything dents that narrative, like maybe a new AI model comes out of China. I don't know. That's the problem. I don't know, but I do know that buying calls right now is just like super, super expensive. And so, this is a moment where things break and they can't, in my view, calmly reset, right? It's going to take a spasm like the 10th to kind of reset. And so, again, that's really like, that's what's got me worried. But again, I'm saying all this and I sound like a jerk because I'm being like, well, it could go up or could go down. But both those tails are quite real. I just think that we really have to be focused more on the downside left tail at the moment and maybe buying some VIX hedges and things because no one is positioned for that really at the moment, that kind of like downside spasm. Whereas everyone's already positioned for the upside. So it's like, I can't get cheap calls really anymore. And so I can't, like, either you played that and you're in it right now, or it's kind of like too late, or, in my view to pile into calls thinking you're going to get a great risk return.
I think a lot of people attempt to simplify this of bullish I'll buy calls and bearish I buy puts. And to clarify to the audience, a lot of the times with spot gamma as a whole, you guys are more of saying this is the setup. So even if you want to be bullish, there might be a better way to express this same thesis. Because hey, sometimes you want to buy calls to be bullish. Other times you should sell puts. And maybe sometimes everything is fine and you want to do a condor. So I think sometimes we almost got to level up to the next thing of remember, there's multiple ways to express a similar opinion, but due to the options dynamics, which are getting absolutely insane, there's just a better way to put that same idea into the market. And it's really those option dynamics that before we dive into the Mag 7, FOMC and gold and all that I want to ask you, just because you've seen the, I guess, like prolific usage of options as derivative contracts now, that this spasm that we saw, and that was a great example with Trump that you were bringing up of, historically, I don't think that would have ever existed. I think that was an outsized reaction. I mean, I believe what happened just from a geopolitical level is China did something. Trump didn't respond for 26 hours. And then from one true social update, the market went crazy and people were acting like it was Armageddon, even though that day we hit a new all-time high. People were calling for stock market crashes the day we sold off from an all-time high. And I think it was just, things are just getting a little bit more volatile, intense, and it feels like the amount of contracts being traded it's just like it's no longer the saying of like, oh, the stock market is the dog that weighs the tail of derivatives. Like you and I joked about this in the past of it's the dog, it's the tail, it's the bone. Like right now, stocks are almost like our scoreboard, but everything is just being bet via options and other forms of derivatives. In terms of the data that you have and how you've seen trading for retail and for institutions, for everything, the whole gambit, is this true, or is it just like my Twitter feed like inundating me with this?
I mean, we traded 110 million contracts on the 10th, the spasm day. That was a record high. And it's like every month is a new record, right? And we had record call volumes into that spasm date. I didn't check call volumes. I should have before we came on here. But the volumes just keep setting records in the option space. You keep having new ETFs. If you look at the size of money going into options-based ETFs, that keeps increasing at a crazy rate. And look, a lot of those 2x, 3x ETFs can function on what's called swap, right? So they don't necessarily need options directly. I think to hedge them, they use options a lot. But if you run out of swap lines or whatever, then you start to have to turn to the options market. So there's a real tie between those levered ETFs and the options market is the key point there. And so everything is just getting more financialized. I mean, there's like these weird like perpetual crypto things now that are bleeding into the equity markets. Like there's just all this weird, just derivatives and gambling on everything is just such like a meme in this market. And again, that all adds leverage to the system. And so stuff goes up faster than it used to, and it goes down faster than it used to. And the first time we saw something really like this was July of last year. Do you remember when like Jensen Huang was signing a women's chest, right? And it was like
No, that's
July
normal
of
for a
last
CEO.
year.
I
Right.
did, when I worked at Capital One, we did that every day. That was just like a lunchtime activity. Like,
I mean, it's crazy. And now that, stock is much higher now, but the point is into that was like, it was the meme of the moment where the same risk signals that flared on the 10th first flared, and we broke 2017 levels of volatility metrics into that record move where Nvidia was just going up every day,
Order
like
filled.
5 or 10%, right? And into July of 2024. And we lost 5 to 10% in that market in July of 2024. And that led to the August VIX 60 day. Remember August 5th, like the world broke, right? And to me, that was the first time we saw the full ramifications of this like leverage and options chasing in the market in this way, right? And then what happens after that? We have the January DeepSeek problem. Remember, Nvidia puked 14%, biggest market cap loss ever because of a new AI model out of China.
Yeah.
And then like 2 days later, it was totally back. And you're like, wow, what happened there? That was crazy. And then what happened with the Tesla Elon thing? Remember, Elon and Trump started like a Twitter spat, and then that was the biggest market cap loss ever. I think that stock also went down like 14% intraday, and people are like losing their mind like it's the end of civilization because they're looking at a stock that's down 14% intraday and assuming that is like a legitimate selling, when really what's happened is everyone got way too long, way too levered up, and now we're getting the unwind of that, right? It's like, when's the best time to buy stocks? When you know people are getting margin called, right? Because they're forced sellers, and that's ultimately what that drives. So you see these spasms keep happening more often. Like, they were like once in a lifetime. Now it's like once a month. Now it's like, it just keeps kind of
what day of the
and,
week is it going to happen type of a deal?
Yeah,
Just,
it's really getting crazy.
I fully agree with you. And obviously, when you add a lot more of leverage in the system, you're going to get a lot more like volatility and craziness and these things that are supposed to be black swans and rare. But just to play devil's advocate, the fact that it's all happening through the derivatives market, which by definition is more transparent than the equities market, isn't that then kind of a good thing? Because like the amount of tracking that even Spot Gamma does in options, you cannot do that with stocks. So like it's almost like it's a good thing, but it's coming at a cost. It's like we're getting more transparency, but the way we're getting it is through extreme leverage. So it's almost like a balancing act. Is that like a weird way to look at it?
I mean, for us at Spot Gamma and anyone that really watches the options market, it's like the best thing you could ever ask for because you get that extra transparency of the options positioning. And so when volatility goes crazy, especially if you're looking for it before, so it's like I expect a spasm, and then you get a spasm, you're like, great, options market was flashing this, then I got it. And I'm looking at what caused the sell-off, and it's like a tweet, and you're like, okay, great. Like, I feel like I really understand what's happening. So, like, that allowed us to buy the dip on the 10th. And we were talking about this in the founder's notes. Like, we like call spreads here for these reasons, right? And so you get great fixed risk reward. You can set up so many interesting trades, as you were mentioning before, to express different views in the trade setups themselves. But it's the same analysis to understand how dealers are positioned and how changes in vol might move markets. And so I think it just gives you like such a clear-headed view of what's going on. Like if you're just a macro guy and you see that drop and the VIX go to 30 on a tweet and you're like, this is the end of US-China relations. Like, we have to totally, it's a whole new paradigm. And it's like, actually, no, it's just like a bunch of people just got like punched in the face because they were too long of calls and they had to puke those out. And like, now we're good. And that's kind of like what is setting up here now, right? It's like, this rally is stupid because it's a levered rally and we have to like revert to the mean a little bit. Like, so the ultimate path is lower left to top right over the S&P 500 over the last 100 years or whatever. Like, why should we doubt that inflation and, or if you want to call it, currency depreciation or
the
like
basement
whatever
there.
it is, like market's going to go up over time in all likelihood. And so it's like, there's a lot of mean reversion around that, a lot of volatility and variance around that. And so, if you see that in the options market, you can plan for it better, but then also you can exploit it better, right? Like it's a lot easier to buy a call spread than to put your whole 401k or your whole account into long spiders because the risk reward of a call spread is totally different than, just buying the stock.
This is absolutely phenomenal framework. So with that in mind, over the next about 36 hours, today at 2 p.m., we have the rate decision. Jerome Powell speaks at 2:30. Market closes. We have half of the Mag 7 reporting. 10 p.m. tonight, East Coast time, is when Trump and Xi talk. So who knows when we're going to get announcements from that. And then tomorrow, pretty much the other half of the Mag 7 is reporting. The next 36, 48 hours, what are you looking for specifically in terms of the bull case and the bear case where you're just going to feel a little bit more confident of like either a continuation to the upside or, like we're kind of getting close to this spasm?
Yeah. So I have some call spreads that I added on in the 10th, and I'm working on rolling those up and out. So essentially trying to like capture some of those gains. They're end of December call positions, and it was kind of like a core position. I started earlier this week buying those VIX call spreads I mentioned before. When I'm looking at earnings trades, we launched a calculator yesterday. And if you go to the Spot Gamma link that's in the chat that you offered there, it's open house. And so what's cool about our calculator is you can adjust the implied vols and the skews around to make sure you're getting a real accurate representation of how the changing in vols are going to make moves. And the reason I bring that up is because with the Mag 7 earnings, if you look at our Compass tool, you'll see that all of the names are at this like very rich call skew position. So I'm looking at trying to sell call skews, maybe diagonals, those types of options trades into these Mag 7 earnings, not because I think necessarily the earnings are going to be bad, but because I think the calls are just too expensive. So you could have good earnings and call values can still deflate a little bit. So I like that. I like playing those in the short term. Again, just because statistically, like we're at like 99th percentile or 98th percentile call values, right? So it's like, that is what I'm using. I'm just using the stats. Like I could be wrong, but the stats tell me that these are very rich, and the price action is not hard to see. So I like that after earnings, trying to mine that rich call skew is the way I put it, or exploit those skew into these Mag 7 earnings. Plus, these names are already up so much. It's like Google's up what I don't know, like 10% in the last like week or something. So it's like, what more is there? Like it feels like a lot of these moves were just pulled forward, right? Like everyone's already expecting good Trump Z meeting now. Everyone's already expecting, some really good stuff. On Twitter, there's a lot of people talking about Amazon throwing the kitchen sink at some stuff. Like they announced like video game closure and some firing and stuff. And so I'm actually bought some put spreads in that one just as kind of a punt. The puts are really cheap. The puts are cheap kind of in a lot of these things. So, that stuff on the short term, I think is interesting to play with. And again, it's really easy to model out the scenarios here of what happens when vol moves certain ways. But I think the big headline scenario here is I want to try to maintain upside exposure via calls and call spreads in the S&P. But, I'm buying those VIX hedges. And if the market starts to wobble, so specifically if we break that 68.50 level right now, I'm going to be much more aggressive about shorting this market because of that spasm, right? I think there's just so much momentum here that when you get that first risk off flare, that is going to be the signal that we have another couple percent maybe to go in the S&P downside, and vol could really spike. So I want to respect the first kind of real downside draft that we get as a signal of, okay, this is the start of something big to the downside, as opposed to look to buy the dip.
Okay. Yeah, no, that makes sense. And before we dive into the tools that you're using to generate these ideas, do you have any specific thoughts on gold? Because right now, the one thing that's been boring for years, apparently it's like the hottest topic. So I know it had a big rip, about an 8-ish% pullback. It's showing a little bit of strength going in today, which is interesting because we're vol up, gold up, market up, everything's up. And I'm like, well, this is not going to sustain forever. So do you have any specific thoughts there? Because I know you've had a lot to say in your founder notes.
Yeah, and on the 20th we said, look, the gold IV rank. So like, how expensive are gold options? Those hit 100%. So the highest gold vol was in the last year, and there were some indications that gold vol was like historically at extremely elevated levels. And to your point, it was gold up and vol up at the same time, which is unusual. It's like stock up, vol up. And so the problem with that is if you're trying to buy puts in gold to bet on downside, you actually could lose money, because when gold dropped, so did vol, right? So puts actually lost value in some ways for different structures. And so what happened really quickly, though, is that a lot of what was happening in gold, in my view, was people were hedging the move. Because if you think about who the average gold person is, like they own a bunch of gold in their portfolio, or they own it in their bunker, or whatever it is, and they're buying put hedges on this incredible rally, I think, to hedge themselves. And so as soon as gold did drop like 8 or 10%, puts started coming for sale. So vol came in, and actually what we're seeing now is people are starting to shift back into calls into gold, which to me is super interesting. So I don't have a good reason to be short gold at the moment. I think you need geopolitical risk to want to get long it again. But being short here at this moment doesn't make I see no good signal that like there's there's nothing anomalous now really in the gold market that is super interesting. And so, again, if I don't know if Trump Z shake hands, certainly if there's any kind of a Russian peace deal, which what do I know about that, or Middle East peace deal, what do I know about that? Like I think that would crush gold. But at the same time, like the trend is your friend there. So I also don't want to be shorts. Like don't want to be short. Don't have a great vol signal there. But it does seem, I would say that being short here doesn't make a ton of sense from the options landscape. And so, if you're going to put a gun in my head to do something here, I think getting long, I would favor that over being short, just on the basis that people are no longer buying puts. They seem to be selling them.
Excellent. And I think that's the perfect diving off point. I'll let you share your screen. Let me switch this up so we can dive into some of your brand new tools that you're using to come up with these. And folks, I want to clarify to everyone who's watching this that this isn't, of course, Brent has an extensive amount of knowledge in the market, but from a little bit of just studying yourself of like what these tools are, and you guys have all the breakdowns, like you can come up with these trade ideas and these, I guess, like opinions of the market the same, because it's all based on the same set of data. It's just, can you interpret it properly? So I want to put that out there, that I know sometimes it feels like this learning curve is very steep, and I'm not going to, I guess, sugarcoat it. At first, it truly is that. But then when you've been around the block a couple of times, all of a sudden, this vocabulary and the vernacular, it kind of just becomes second nature. Like it just ends up what you become looking for. I remember the first time I was in spot gamma, I was thinking, okay, I know what iron condors are and I know how to trade it myself. But to get like the gamma impact, I was like all of a sudden connecting these other things. And now it's just like a casual chat of every single morning. So folks, I get that it can seem like a little bit cumbersome at first, but I swear if you just give it that like actual legit effort at first, you're going to get over the curve pretty easily.
Yeah, I like to hope that we also are giving you like an education as we go. And so to your point, if you try to digest everything at once, and if you're new to the options market in particular, it can be a lot. But let's just start off with what the levels are for today. This is our trace tool. It's one of our marquee tools. And we talked about those big trades that were in the market, the 0DT trades, right? So I have 0DT checked, and you can see the trades are right here, right? 68, 69, 65, sorry. Here's the big at the money trade. And then here's the big out of the money trade, right? 68.50. So you don't need to know anything about what specifically is going on here other than this is support and resistance, right? So there's your resistance and there's your support. And that's it, right? Now, it turns out these are 0DT positions and there's dealer hedging flows and all these other things. But these are the levels that if you're not watching the options market, you don't know those are there. And the market loves to tag these levels. It happened yesterday. And if you don't believe me, we'll go to yesterday and let's look at where the big positions are. So where was the giant position yesterday? 68.95, right? And that position was there all day. And so what do you see here, right? The market just has to tag that level. We call this the seek and destroy algo because the market has to tag one of these condor trades that's in every day. And so when I click the map forward, which is what I'm doing here, you can see like we just go up there and tag that level, and it happens on a daily basis. And so forget knowing about gamma, Vanna, blah, 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 blah. Support and resistance, like what's your target? And your target should be, in my view, these giant options trades that come into the market every day. And so if that's all you take from this, then I think that's like more than enough, right, to start to understand this. And there's so many people that don't watch this stuff in the options market, and they come up with these like cockamamie reasons for the market doing something. And they just totally ignore the most obvious thing in the room, which is these massive positions. Now, how do you know they're massive? If you hover over and look 3 lines down, we tell you what the percentile of that position is, right? So 99th percentile plus, that's a huge strike. That's it. You don't have to guess. Okay, 99th percentile, cool. That's huge. I get it. So very easy to discern those kinds of things. I mentioned before the crazy prices in the options market. So if you go to the scanners tool here, and what this is showing you is this compass grid, right? Is high implied vol rank and low implied vol rank. So how rich or cheap are options? And then are calls expensive? If you're on the right side, that's what this is telling you. If on the left side of this map, puts are expensive. Make sense? Look at where all these names are that are reporting. And again, if you hover over this, we tell you what the rank is. So Google's at 96th percentile. We call this the risk reversal rank. So how expensive are calls relative to puts? They're more expensive now than in the last year, 96% of all our events. Think about what's happened in the last year. You had the April tariffs. You had, I can't even go through all the things that have happened in the last year.
Yeah.
A lot. So these are really expensive. And then to have an IV rank of 53 for a situation where the stock is just going up is really saying something. Yes, we have earnings, so IV is always a little bit elevated for that, but you normally only get like a 50 plus IV rank when a stock is crashing, right? Because that tends to be when the moves are the ugliest. So when I'm sitting here saying calls are extremely expensive, that's not me just wading into the pool saying like, oh, this feels warm. Like this is statistically quite rich. And if I put spiders and Qs on there and IWMs, look at where they are, right? So they're all the way to the right of this chart, which is telling me that calls are expensive. Calls are rich relative to puts, full stop, right? That's just the dynamic we're in. And so you can always end up with a situation where they get more expensive. And we don't want to sort of like necessarily say this is the moment where all reverses, like we need a trigger, but we're nearing that moment where saying, okay, sometime in the next month, maybe even sooner, I feel pretty comfortable that we have this weird vol spasm where all this stuff resets. And this trail shows you over the last 10 days where this stuff has moved. So what was 10 days ago? It was the deep sea or the Trump, we're coming off the Trump
rare
spasm.
earth metal issue.
All that stuff. So all of this stuff has just absolutely ripped. So if we have a spasm of some kind, look at where we can just go. Like we'll just go back into this reasonable area. Like, okay, we reset to average. And then I would be like, okay, I think this is maybe a good moment to get back in for the year-end rally. And that's what I'm trying to position for by buying the VIX call spreads, maybe selling some rich earnings call spreads here. And again, I'm not trying to bet the farm on any of this stuff, but a small trade in this market, if you get the VIX moving up that much, can pay off quite a bit, right? That risk reward, I just think is really quite good. So that's really what we're seeing here now. And then if you just want to look at this one other way, we just launched this new tool. It's called the Options Calculator. And so I was talking earlier about Google, this morning, and if you look at something, like Google, we'll just put it back in because it reports tonight. Let me show you what the vol is. So let me just show you this, right? Okay. So anyone here has ever looked at skew? What you see here is this is the 1 month skew. So 11/21 skew, right? These are the options prices for 11/21 expiration. And this cone is the 90-day range for this skew, right? And so what do you see here is like the current skew is touching this line up here. What is that? That's because people are buying calls hand over fist and bidding those prices up. What does nobody care about? The downside, really, right? Nobody wants puts in Google right now. Like, why would you? OpenAI or I don't know, whatever the word is you need to use. So if anything is rich here, if I see anything statistically, we just showed you in that scanner tool that the calls are really elevated, and this looks very elevated as well. So it's like if I have a trade, particularly in earnings, and I want to trade that, I'm looking at where the stuff is statistically rich, right? Not because I have any idea what Google is going to report, what their products are, et cetera, just because I think the market has bid these things up too much. Does that make sense?
Yeah, definitely. So it's almost like one boat is too loaded, and then inherently, if something were to go wrong, the unwinding of it is exactly what we saw 3 Fridays ago, whatever it was.
Yeah. And if you're expecting, if it's like, hey, Matt, I'm going to give you a new car, and it's a Maserati, and you're like, that's amazing. I love Maseratis. And I give you like a Corvette, you're like, oh, but you still got a new car. So it's like if the earnings are like good and like, hey, we made money and it's like $1 billion. That's great. But I was expecting like $1 trillion of earnings. Yeah. So that's disappointing. So the calls are positioned for, billions of earnings, billions and billions and billions and billions of dollars earnings. And if we just get like a couple billion, which is still great, it's like, oh, that's, that stinks. So why does this matter? So I just want to show you this. In our calculator, we launched this because I couldn't find a calculator that let me adjust implied vols the right way. And that is everything in options trading. And again, if you go to Matt's link, you can get access to this for free for today and tomorrow. But what this allows you to do is, this is that same chart I was just looking at where the calls are really rich up here. And so I can drop implied vol because earnings crush, right? So I can move implied vol, let's say down 10 points. So that's what would happen to the options prices after earnings. I think they'll contract, right? But then I can also flatten out skew. So I'm like, what happens if that really bullish expectation just kind of like cools off? So I can flatten that out. And you see this line over here starts to shift.
Oh, that's so cool.
That?
Yeah.
So, if people are getting uber bullish because they, bought OpenAI, I don't even think they can anymore, but like that's uber bullish. And then what if it just like eviscerates because like, hey, everybody, we don't have anything else to do today. We're making money, but like we're not, it's not all that exciting. This flattening of skew and increasing of skew is to me like the difference between someone who's a consistently successful trader, like making money every day, doing it for a living, all that, and people who just struggle, right? Because it's this volatility dynamic that matters so much. So when I adjust that vol then, and then I look at doing a trade. So in this case, I have a 275 call. Let's just make it a 300 call for sake of argument. So now when I project my P&L, you can see the yellow line is what the market is expecting, right? Which is, hey, I'm making a lot of money on my calls. Isn't that super exciting if the stock goes up? But because of earnings getting crushed and skew, if that does flatten out, you can see in purple what the maybe more accurate representation of the earnings is, right? That's what the purple line is because it's using this implied vol that I set up.
Interesting. So to your knowledge, are you the only company on the planet that has a options calculator that allows you to like appropriately model out the vol change?
Yeah, I've used all of the calculator websites. There's actually not that many of them. There's like some free ones that don't allow you to move vol at all. There's some people that let you move vol in very naive ways, like just shift it up or down, and they don't give you full stats in terms of, you know, all of the cones here, everything else on our vol dashboard, that kind of thing. And I think I've never seen anyone that allows you to shift skew. I think Bloomberg can, but if you want to pay $2,000 a month for that, then more power to you.
Yeah.
You know, this is $80 something a month, right? With our standard subscription, you get access to this. So I think it's amazing. Again, we built this because we couldn't find it anywhere else. That's it. Like it's a lot of work. It was a lot of engineering. And again, the shifting of this is what really changes things. And you can put in custom trades here, volatility spreads, butterflies, diagonals, all that stuff is already built in here, and you can move the time horizons around. So you get a real, in my view, just amazing picture of how the shifts in volatility are going to affect your trade. And again, I think that's the difference between making money and losing money. And because the vols are also rich right now, like this stuff matters more. You're not going to play with skew that much if like options are just like average prices, right? Average skews, nothing exciting is going on, but everything is so whacked out right now that this is like really matters, right? It really matters if you're buying calls that are too expensive, because to the point of the calculator here, you know, if the difference between making money and losing money is if vol comes down and skew flattens out, you overpaid for those calls, which means that the odds of you making money, you know, it reduces, right? Because you paid too much. It's like you bought a house at the top of the bubble. It's like still a nice house, but you know, you paid way too much, and so you're underwater now, and that can happen so much in the market. To the point of gold, I mean, we did a presentation yesterday that talked about the gold 375 puts. And
which, for everyone listening, if you're tuning out a little bit, this is gonna blow your mind. It happens once in a while in the options market, and gold recently is a good example of how wonky things can get. But I love this story.
Yeah, so the gold puts, if you bought December 375 puts and gold went down 8%, you actually didn't make any money. You were just flat. But gold went down 8%, and so you'd say to yourself
8%. And then on the flip side, you even showed how if you had puts before the run up, you actually were break even or making money, even though the underlying went up, which this is obviously, for everyone listening, very rare within the world of options market, but it shows the emphasis on how your extrinsic value, when that just is like driving the whole thing, sometimes your intrinsic value, if you have any, just it doesn't matter.
Yeah, and some people are sitting here and you know, I don't want to lose people on this. I want to emphasize how critical this is. So I'm going to give you one of the most extreme examples I've seen recently. So you remember Qualcomm yesterday or 2 days ago? It went from 170 to 200, right? 205. So that's a massive move. You can see this on your screen, right?
Whew. Yeah.
Stock's up 20% at 205 at 10 o'clock in the morning. Okay. This chart is the 185 puts. So these are the 1031, 185 puts, okay, for Qualcomm. Does that make sense? This is plotting the price or the value of the put. Does that make sense?
Yes. So
what was the stock price right here? 205.
That's crazy.
Right? This 10:30 in the morning, 10 o'clock in the morning, stocks at 200 to 205. That, you with me?
Yes.
At that moment, you would pay $9 for the 185 puts, okay? What then happens to the stock? The stock goes down from 1030 to, from 1030 goes from 205 to like 189-ish, right? You see that by about 11 o'clock, 12 o'clock.
Yeah.
So the stock loses $15. Just to make sure everyone's clear on that, the stock drops from that high 8%. Look at what happened to the value of the put. It went at the same time the stock went down $15. The stock went from 9 to like 4. So if you were like, I'm going to buy these puts because this Qualcomm move is dumb and I think the stock is going to go down. The stock went down $10 to $15 and you at the same time lost 50% of the value on your puts. Why? Because the vol was so insane.
That's just, ridiculous. And I think
this is
in the world of retail, there's too much association of up calls, down puts, and that's how I have to do it. But volatility and thus time as well. Like that's just, it shows how incredibly important it is to understand those other nuances of this tool referred to as options. That's crazy.
Yeah. I mean, you lost literally $8 at the lows, and then things leveled out a little bit after that. But this is like one of the most extreme examples, but it just hammers home why it matters when I'm like, hey, you guys, you can come in here and adjust your vols, because that's an extraordinarily extreme 30-minute example. But the same dynamic happens over a couple of days, right? With earnings crush or skews too rich and it flattens out. Like these are the same dynamics, like in a way. Like what I'm looking at in the market that's so crazy. Like we were talking about Core 1M, and you can look at this in TradingView. Like again, you don't have to know what correlation is and the dispersion trade and all this other stuff. Like I basically like Core 1M because if I can just give you a chart of all the weird dynamics that I'm seeing in the market, anytime we go below this red line, it's telling you that people have bid up stock calls too much. People are too into Nvidia, Apple, Google, whatever. Right. And that shows up on this chart. This is the July period that I was talking about. This was the lowest this metric got since 2017. So if I go all the way back to 2017, and for those who don't know, 2017 was the craziest year in options volatility ever. Also a Trump was in office at the same time, right? So we broke those levels, and this is when the stock market dropped 5 to 10%, and VIX ultimately went to 60 on August 5th, right? But then I talked about like how stupid or weird it was DeepSeek. Look at where we were when the DeepSeek news came out. This is when it came out. Again, we go below 8. So you can just be like, Brent, I don't get this, but I'm telling you, when we go below 8, that's when I'm like, things are topsy-turvy right now, and you should be concerned, right? You want to hedge a move. And so here's the Trump spasm right here, right? October 7th, we wrote in our founder's note, risk alert. And then today I wrote another risk alert because this is the type of thing we're seeing. This is just telling you that calls are way too bid up for single stocks versus the index, right? And so you can dive into that if you want, or you can just be like, okay, like the options market signal here is telling me like things are too bullish. It can last for a week or 2 or 3, right? But ultimately, like we're in kind of the trouble zone, as you can see here. And so what does that mean? This is a great example. Like people are paying $9 for calls right now, right? As an example. And as soon as that bubbles pops, those $9 calls are going to go, they're going to be eviscerated, right? Like this is that's what I'm worried about, right? This is the trail. Like we're going to go from up here back to down here, and all that is call value destruction. If we move back from these names all follow the trail back down to here, then what that means is correlation goes up, right? And correlation going up means everyone's suddenly getting out of the calls and going into puts. I'll frame this just one last way. I don't want to lose everybody on this, but everybody knows what the VIX is, right? Mm-hmm. So look what happens here, right? Look at the correlation between these two. Here's the VIX spiking in April and correlation jumping. And I was talking about the 2024 anomaly, right? This is right here when the VIX went to 65. See it? Like
the yen carry trade blow up, or the fear of that. And
yeah, but what made the bed for that whole yen carry trade blow up? It was this giant unwind of Nvidia calls and everything else. So the two have an incredible amount of correlation between the two of them. And what is just so weird about this is the VIX is not really going down, even though that correlation got crushed, right? So that is really anomalous. And that's also why I like owning VIX call spreads here, because when this breaks, it's telling me that the vol's going to go crazy, maybe more so than like the S&P having like a giant directional sell-off, if that makes sense.
So I have 2 questions. So for everyone listening, maybe it's a little bit more actionable for them. Maybe from a metaphor perspective, this Core 1M, would you argue that this is a quality way to look at of like that means there's a lot of gasoline, but you don't know if someone's going to light the match. Like this means that there's gasoline there, but we're just like kind of all awkwardly waiting. And like recently, Trump lit the match with the rare earth minerals thing, and we have the yen carry trade. But this is kind of like your gasoline reading.
100%. And the problem is with this is that, so the key point here is that I don't think this unwinds gently. I think it unwinds with a big sharp sell-off, a 10-10 kind of like VIX spikes, and everyone's like, what the hell just happened, right? I don't think it's like, hey, we grind. I mean, we could just grind for the next 2 weeks and be bored. But again, people who paid for calls in that situation are going to bleed out real hard then if the market does nothing over the next 2 weeks. So what I feel very strongly that the market reacts with a big volatility spike. And so, here's Core 1M, right? And if you look at the S&P chart, there's not a huge sell-off last time we went below this 8. And by the way, 8 is like a number that I just put on the chart to make it easier for people to understand. You could be in this situation like in June, where actually we set new all-time low in correlation, right? Because the weirdness kept getting weirder and, we hit extreme levels. So to your point, it's like the gasoline is there. Does it take a week? Does it take a day? Does it take 2-3 weeks for this to sort of like crescendo? We need the trigger. The trigger could be the tweet, a missile, God forbid, missed earnings. What if Google's like, or Amazon's like, huge, who knows, right? I don't know what it is. And that's why it's like, look, don't go full scale into protection here. Just like buy a little bit, right? Be sensible about it. Like put some on. If you've been long, you've made a bunch of money. So peel some off for quote unquote insurance. And when you see that first shot across the bow, in other words, that first like risk flare, then I think you can be more aggressive. And if you're trying to say like, well, hey, when is that? When you look at this map, right? Red on this map is like high volatility zone, and blue on the map is like a safety zone. And so right now the map, because of these big condor trades, is overall pretty blue, right? So for today, at least in the FOMC, like the risk is pretty quiet. But the closer we get to FOMC, the map starts to get a little bit more red. And then after the close today, I think when these positions go away, you're likely to see this map be a lot more red. So what I mean by that is, imagine that tomorrow you come in, right? And then this is all just red like that, right? Then if the market gets into this zone of red, that's where the real big selling can happen. Does that make sense?
Gotcha.
So you can watch this in real time and track on the map where we are. Like if you're in blue, you're okay. If you're in red, then we have some problems. And so, that's really like the key dynamic. And with 0DT options and everything, this map updates every 10 minutes throughout the day, and it shows you how hedge funds are essentially positioned. But, when you look at this, like there's no support really in this market. Like, doesn't mean you want to short necessarily right now. It just means if we get that trigger, like there's not, outside of this 0DTE position for today helps us a little bit, but like there's not this level that I point to, but like this level saves us. It's like to the downside, there's just kind of openness, right, to the downside. And so the reason I bring that up is because I want to add some positions today, because I don't have this level where it's like, if this level breaks, watch out, right? It's more of a volatility risk, meaning that options prices are just going to start to unwind. And, I don't want to be in the situation where it's like, I went to get a cup of coffee and the tweet comes out and I'm like, move already happened, right? Like, so that's why I like to peel into this a little bit. And also to your point, like if you just want to see what the biggest positions are, so there's another way to look at this in the SPX. Let's talk about the upside. Like, let's just look at the open interest, right? This is pure open interest. So calls are in orange, puts are in blue. If you see a positive value, that means the dealers, the market makers are along that. So there's a lot of people that are short calls at the 7,000. The dealers own those strikes. So I think when you hit that upside area, the market's probably also just going to pause and have to really digest that level. But if you look here, like these are all short puts, right? And the reason I say they're short puts is because when you hover over them, you can see they're negative, right? So there is some situations here where there is some put fuel down below. And essentially what this is the dealers are short puts to the downside. So some people are buying some hedges, which can add, some fuel to the fire. And if you look at the big levels, like there's nothing that really necessarily
6,
stands out here, right? Oftentimes you have like one big level where you can stand on it and say like, this is the level I have to lean on, but it's very kind of mushy and odd down below. So here's another way to look at this. These are the 0DTE positions, right, that we're talking about today. but there's not these giant strikes down below where it's like, look, this guy owns 50,000 puts that expire in December, and if he closes those, he'll save the market. Like those positions just really aren't there right now. Which is why, again, I'm continuing to focus so much on volatility aspects, like calls are expensive and I want to buy VIX calls, et cetera, because I just think that it's a very fluid price action in the underlying zone. So if you buy VIX calls and VIX just starts to spike, you're good. Whereas I worry that the market could rally to 7,000, then we sell off. So if you buy 6,800 put and we rally to 7,000, then that put protection is not helping you with anything anymore. You know what I mean? Because it's going to be 100 extra points out of the money. Hopefully you're able to track that.
Yeah,
that idea.
to see how this is all moving throughout the day, like, or day from day, because I was looking at the what I refer to as the gamma structure yesterday, and it's completely deteriorated. Yesterday there was a lot more positive gamma on the board, and today the existing thing is just the iron condors, but it is absolutely wild.
Yeah, and look at the amount that's 0 DTE. I mean, this is over the last year, right? Like 60, we hit 70% is 0 DTE. So 60 to 70% of SPX volume is 0 DTE. It's traders that come in because they have a view for today or strategy based on today. And then guess what happens? Like if the market is crappy tomorrow and vol starts to spike, they go away, right? You can look at this chart and see like when did they go away? It's when the days where things get squirrely. So that's spiders. Like look at the NDX. 80%, 70 to 80% of 0 DTE is NDX. The Qs, same thing. 65, 70% normal for 0 DTE. So, this stuff is like the 0 DTE and short dated options are such a driver of markets to the point of looking at these big condor strikes in terms of volumes. And those flows are here 1 second, offering stability and targets and all that. And then if VIX spikes and people get worried about risk, like all those people go like, oh, we're out, right? And what is that? That's liquidity. Like liquidity goes away. That's what happens when 0 DT goes away. And then you have these like, kind of crazy, market moves. And so, to the point of like, we're fine today. And then tomorrow, like, it's like, what the heck just happened? Well, when 70% of your volume, is tied to stuff as day trading, and then, that day trading disappears, like, wow, well, that adds to the volatility, that adds to the, market movement.
Truly fascinating. I know we've already gone over in time and I want to be respectful of yours, but I do have like one final question. So we're talking about how it's so densely packed in 0 DT, and in this conversation you've referred to how many ever Fridays ago it was that you kind of said, hey, at some point we have to be careful, but you knew somehow at the end of the day that it actually might be worthwhile to kick back long. What were you seeing that it was telling you it was a one-day event versus the statistical likelihood of it being a prolonged sell-off?
Yeah, what happens in that situation, right? So this was Friday, and so I think it was on the 16th. I'm trying to find our actual note where we were mentioning that. I think it was on the 17th here. So yeah, so this is the 17th, options expiration, right? So if you look at the sell-off here and you say to yourself, like, what can I do? And what's interesting about this is it kind of lines up today only on the put side in terms of, is there a trade? And if there is a trade, like what is the trade that I can exploit? Like where are the cheap options? And I want to generally buy cheap options and sell rich options, right? So this was the spasm, right? On the 10th, we dropped sharply and then we kind of traded sideways, right? Like nothing happened. And then we had Friday OPEX. What does OPEX do? It clears out the prevailing positions. And there was a lot of people owning puts at that moment. Like vol was pretty expensive. And so we knew that the positions going away would ease risk, right? Because positions were just being removed. So that makes sense. And we wrote here on the 17th, and basically what this broke down to was like, and we've gotten to this point where it's like, people just want, like, just tell me what it is that you think I should do, right? So it's like, look, what is the trade? And so our rules dictate here that we don't want to sell puts into a weekend, right? Being short options over a weekend in particular is dangerous, particularly when things are chippy. That's how you get blown out, right? Okay. So what we essentially said was, what that leaves us with doing nothing, which is always a very valid thing. Or the second one is, when we were looking at our calculator here, we said, we think you can get into December calls because those don't look terribly expensive. And if these puts get cleared out and the market rallies, that would be a great way to make money, right? So this was our one trade recommendation, and it was based on all of these ideas. You can read them right here. It's like you have OpenAI stuff, you have Trump Z deals and earnings and all this other stuff, right? That positioned us to get into these calls at this time. Again, this was on the 17th, and we very clearly were able to plot the P&L. Now, the wild thing about the P&L is I was actually wrong in projecting vols because things got stupid. So like I didn't calculate vols going up. So much as the market ripped, right? So this actually worked out better in this scenario. But the idea here was like, look, calls are not expensive. I don't want to be short puts because there's a ton of risk in that, and they weren't particularly rich. But calls look like they looked okay. That's what I wrote right here. They look okay in terms of price. So that's a great way to express that upside, because with calls, it's like, look, I spent $70 in premium is what this trade was, and that's my risk. If I'm wrong, I lose $70. That stinks. If I bought a bunch of spider shares and I was wrong, the market goes down 3-4%. Like that could be horrible, right?
Yeah.
That could be really painful. And if you're short puts and the market goes down a bunch, like that also can be really painful. So identify like where the soft spot is, where the cheap stuff is, where the rich stuff is, and use that as like your guiding, your guiding light. Like I think that makes a ton of sense. There's people that are taking all sorts of flack now because they offer these, call selling strategies, like pay me $14 a month and I'll teach you how to sell calls. Like nothing is wrong with selling calls when the prices are high. Systematically, it's like if all you have is a hammer, you're looking for a nail, right? Like systematically only selling options all the time is a killer, right? Yeah. But there are times where it makes a ton of sense. Like calls are pretty expensive now. I don't want to buy them. I don't want to take naked risk ever, but like maybe selling some tech calls makes sense to help fund some VIX calls, for example, or something like that. So it's like there's so many ways to make great risk reward trades, and I love this market because there's just the options prices are moving around so much. It's an options driven market, which makes me think we have more edge in understanding what's driving stuff. And then with options trades, you can just structure so many neat and interesting views with really great risk reward. So it's an incredible market. I hope it never ever stops.
Yeah. Obviously, there's a lot to digest. So folks, we'll make sure to cut this up, repost it. You can rewatch it. And on that note, I believe you are going live again today. Do you want to shout out the time and the place where people can catch that breakdown? I believe you're doing an in-depth look into Hero. Am I right on that one?
Yeah, you're totally right. So it's going to be one of our analysts here. His name is JT. He's smarter than I am, and I think he explains things better. So that's called the Superhero Deep Dive. If you go to your link that you have, Matt, you get the open house that gets you full access to the platform. So you just go to this Ad Spot Gamma tab, and then you can hit the Save Your Spot link if you want, but you just join here. It's just a Zoom meeting. We're going to do a deep dive on Hero today, which I know you like a lot, and I'm grateful for you paying a lot of attention to that. And then tomorrow we go through the options calculator in a lot of the stuff I just talked about in a deep dive as well. So that's like an hour. Sometimes he goes over. Sometimes I'm like, dude, you're spending too much time, but he does it. Deep dive just on that stuff, right? And he explains things in layman's terms a lot better than I do sometimes. So those are open to join if you jump into the open house now. And so we're excited to offer that.
Yeah, that sounds awesome. So noon today, heading into that FOMC decision, and then 12 p.m. tomorrow as well, following all of the craziness that is about to ensue over the past, I suppose, 24 hours, 36 hours. This is about to be nuts. So the fact that you took time out of your schedule today to chit chat with me and the rest of us, obviously, thank you so much. And I'm excited to see how all these tools and services are going to be used by the community. But obviously, from the bottom of my heart, thank you for taking the time, and best of luck in the casino today.
Yeah, thank you so much for the opportunity, Matt. I always appreciate the opportunity to talk to you, and keep crushing it, man. Your trades are amazing. I'm always jealous of that big positive P&L. So
it's brutal swings sometimes. I appreciate
sit with
it.
risk maybe better than anyone I know. I'm like, holy cow, man! I would have closed that trade a long time ago, but you're amazing at it. So
tell me that by the time I hit 35 and I'm either white hair or no hair. So we'll see how this plays out in a couple of years. But I appreciate it. Thank you so much.
All right, man. Take care.
Have a good one. All right, folks, once again, that is Brent, one of the co-founders of Spot Gamma. As he alluded to, pinned to the top of chat, in the description of the video, everything we just chit-chatted about, you can get free access to all of it for a limited time. Free access, pinned to the top of chat, in the description of the video, and you guys can play around with it. See if you like it. I highly recommend you use it at minimum for today and tomorrow. Why would you not? Once again, it is a free access, and hang on. I'm trying to switch this up to see what happened for me in here. Looks like it locked in 500 somehow. Do I have the balls to chase this to the downside 53. That's not so bad. So throughout that, you guys probably heard some of the orders going through. I don't think he did. But anyway, I'm going to leave this up for a second now just so you can see where it got out at 65 and the other one got out at 63 or something like that. But anyway, folks, there's a bunch of new tools, truly. I've used all of these options analytics data tools. I've used all of them. I've paid a subscription to all of them. I used all of them. SpotGam is second to none. And I think the reasoning for that is the people running the platform just have actual industry experience, where a lot of the other ones, unfortunately, they just don't have the background and the, I guess, let's call it the industry knowledge that is necessary to give such like useful analytical tools of what's happening in the options market. And the fact that they're offering this right now as options as like a derivative product is becoming so much more popular to use. It's a match made in heaven. So there's no risk to you. Try it out for the freebie, pinned to the top of chat in the description of the video, and then you'll be able to use it throughout the FOMC craziness today, the earnings craziness today, the Trump craziness today, and whatever the leftover craziness is tomorrow. So highly recommend you guys checking that out. And I fully understand that the interview could be perceived as like dense, and we got into a lot. And I've been there. We've all been there. Every single options trader has been there right where you're feeling it. And I'm telling you, it's one of these weird things where it seems like a completely different language. And then you start using it more and more. And then you kind of get to the top of that learning curve and you look back down and you almost get confused about why you didn't get it. So like I get it. I'm there with you. But it's one of those things that if you just kind of like muscle your way through it, all of a sudden it's going to kind of be second nature and you're going to get it a little bit more rapidly. So as maybe confusing and jarring and messed up as it seems to me now, I'm promising you that is just going to be, it's going to be a limited time thing. And you just have to kind of just keep diving into it, using it time and time again. And then before you know it, you're going to be talking in this weird second language with all of us. So like I said, I'll make sure to cut it. We're going to end up reposting it. We'll get it out there so you guys can watch it. It's going to be a free resource for all of you. And once again, for the limited time, take advantage of the free resource that is all of SpotGamma at this moment. Folks, that's what I have for you. I will we're going to be streaming again today. We're going to be streaming again at 1:45, 15 minutes before the FOMC decision comes out at 2 p.m. Eastern. So we're going to be streaming in the afternoon. I hope to see you there. Remember, the market's crazy. Things are insane. So please protect your leverage. Please protect your downside. Remember, this game is a marathon, and it's just the people who make money are the people who survive the marathon. Just be very, very careful about it being oversized, especially in high volatility situations like this. I appreciate the good vibes. Thank you so much for stopping by. I'll catch you in a couple hours. Once again, streaming again today at 1:45 Eastern. So basically in about 2 hours. I'll see you in 120 minutes. Have a good lunch. Catch you soon. Peace.